All right. Hello, everybody. Welcome back to another episode of The Market Close. Folks, we have so much going on right now, so much that's about to happen after hours, as we have a lot of companies that we are going to get into for earnings. But we had a bunch of things happen throughout the day, which actually ended up being relatively good for the equity markets. We got a green day. It's Tuesday, February 24th. Yesterday was pretty ugly, especially across SaaS. You had that Citrini article go viral. Today, we're getting a rebound. Bitcoin was at 62 this morning, 64.5. PayPal is up 7%. We got a headline on that. Looks like Stripe, which ironically we talked about in the morning. Potentially Stripe is looking to acquire parts of PayPal or the entirety of PayPal. We'll talk about that in a second, but that one up 6%, that now up 14% for the week. Open Doors up 5%, SOFI is up 2%, the S&P 500 beating 687, that's up almost 1%, UAL is up, Disney's up, ARK is up, Meta's up, Coinbase is up, AMD with that big deal with Meta, that one really seeing some love right here, up almost 9% on the day based on a strategic 5-year partnership with Meta. You got DraftKings, Nike, Roblox. I mean, pretty much everything is green today. It is a bit of a rebound. Not every stock has rebounded from levels that they were at yesterday, but a decent chunk of them are rebounding. And there is a reason to point to for why the market is recovering. And when I tell you the reason, if you don't already know, you're probably going to just shake your head. You're probably going to roll your eyes. But nonetheless, this is the reason. And, well, it's the nature of this market. So why is the market moving? Well, because SaaS is moving. Why is SaaS moving? Well, Anthropic had an event this morning in which they talked to a lot of different companies and a lot of different banks, hedge funds, institutional investors attended that event that they had around 9:30 in the morning. And they don't think software is dead anymore. Deutsche Bank, after watching Anthropic's Enterprise Agents briefing event, we have even greater conviction that model providers are unlikely to displace software incumbents and are instead positioning themselves and their agents to be an orchestration layer on top of existing and incumbent systems. Goldman, several single names moved on Anthropic's mentions, many of which were primary constitutes of the AI at-risk theme. Early read is market is viewing this more as a partnership versus displacement. So I know the past month we've been spending time talking about how the market thinks that AI is going to commoditize all these SaaS companies. The reason I think we are going green today is because the market's realizing we're probably not going to commoditize all these SaaS companies. IGV, nice little 2% move right there. Salesforce, that's up 4% on the day. Adobe, that's up 3% on the day. ServiceNow, that is up 1% of the day. Now, the software names aren't exploding as if everything has changed and we're all in the clear and software is clear to buy. I mean, I would imagine we are closer to the bottom than not on software names, and maybe the market wakes up tomorrow morning and has a complete different paradigm switch and it, goes the opposite direction. But based on those headlines from various investment banks and sell side investment research reports that came out this morning after Anthropic put out that event, basically their takeaway, NVIDIA right there going for the high of day 193.50, is that, yeah, we don't think AI is going to kill SaaS. We think it's going to work with SaaS. Zeta, which we have earnings in about 10 minutes, that's getting a 10% move. I don't think it's because of anything Zeta said. It's because SaaS is back in favor and Zeta is getting some love. CrowdStrike, are we up today on CrowdStrike? CrowdStrike, slightly red, basically flat on the day. So not every software name is participating. I think Palantir was not able to catch a bid today. Palantir also still red by about 1.3. But a lot of the software names that got sold off heavy are getting some momentum. Reddit also not necessarily getting the bid. And see, that's the other issue. You should see Reddit and Palantir getting a 4 or 5% move if software completely is clear to go. Microsoft, is that up at least 2%? Microsoft's up 1%. Yeah, you would expect something better. So I don't think this is the moment to be like, yup, I'm buying the software dip. Because again, the market could just change their mind tomorrow. But it is nice to see finally some level of institutional coverage against the argument that AI is going to be commoditized. And as a result, maybe that's why we're getting some green momentum. We will have Workday earnings after the bell. We got a lot of earnings today that are going to be really important. Zeta company I've been covering since around December. That company is going to be important. It's a SaaS name, advertising play, Mercado Libre, basically the Amazon of Latin America. Tempus, you got some healthcare AI stuff. Navitas, semiconductors. Transmedics, organ replacement. Cava, consumer for restaurants. Axon, body cameras. That stock's down a lot since last summer, so we're going to see if that can make a move to the upside. Fslr, they've got earnings as well today. That's in the biotech space. And then you have the other big one, that Workday is a software company that basically is flat today. We're going to see the first time after a couple of weeks of software carnage, can a legacy company like Workday, 33 billion, actually put up some results that gets the market excited. So there will be definitely a lot of results after the bell. First solar in the solar space, Lucid in the EV space, to see how the market reacts. But I mean, so far it does feel like we have a little bit of a tone switch on AI. NVIDIA right there, 193.50 after all the earnings. So it's going to take us about 35 minutes. We will have Technical Tuesday. So it'll be a long episode today. We're going to get through all the earnings. Let me know in the chat if you own any of the companies that are on the left-hand side of my screen. These are all the earnings that we have today. Workday, GoDaddy, Fslr, Realty Income, Lucid, First Solar, Transmedics, Meli, Cava, Axon, and Zeta. The only one I have a position in out of all these is Zeta. And so we will be covering all those earnings. And then after that, we will have Technical Tuesday. Okay, PayPal. The reason it's pumping is because Stripe might be coming in.
An acquisition of all or parts of PayPal. That's according to Bloomberg. And remember, it was only earlier today that Stripe announced a tender offer for employees and shareholders that values the company at $159 billion. PayPal's market cap, meanwhile, shy of $44 billion. It also comes in a time that PayPal leadership is very much in flux. Board chair Enrique Lores is set to take over in about a week after former chair Alex Chris was pushed out this month following a failed turnaround plan. Those shares, though, up 6%. PayPal investors happy about this news.
Yeah, I will follow that. Mac, thanks. Mackenzie.
Put in the chat if you're in PayPal. I mean, it's having a little bit of a moment here. I know the stock was at like 55 before earnings, and it's only at 47 here, but the stock also fell to below 40 a week ago, and now it's at 47. So if you did catch the bottom of it, which now it feels like 39 was the bottom, looking in hindsight, especially if this acquisition rumor is true. Also, the problem I had yesterday with the acquisition rumors is that there was no legitimacy towards it because there was no name. If you put Stripe in the conversation, I mean, yeah, Stripe can afford some PayPal. It can absolutely afford some PayPal. So it wouldn't be crazy to me to see if that one gets some love. All right, which one outperforms? Let's do the poll. We'll put up Tempus. We'll put up Zeta. We'll pull up two more that are big. We'll do Meli. And we'll do Axon. Meli and Axon. What do we think? Which one out of these outperform? This is a great day for all these companies to report. Blistering green. Market sentiment might be changing around SaaS. NVIDIA's tomorrow. NVIDIA's getting close to this 193 level, maybe normalizing around 190 to 195. We'll see tomorrow what happens after earnings if we can really solidify this. But S&P is up almost 1%. Definitely is a better day than not to report. CoreWeave, look at that, up 9% on the day. IREN, that's up 6.8%. Nebius is up 1.48%. Coinbase announced stock trading today. So you can now trade stocks on Coinbase. That stock's up about 0.5%. Carvana's up 0.5%, and then Cypher's up 12%. My only concern with some of these companies on earnings is that their expectations are a little bit higher than expected. For First Solar, I think the street's being a little bit aggressive when I was looking through their numbers. Hopefully they beat it. But again, solar energy is in demand. But with this administration, it's not really in the right narrative per se versus oil and gas. Zeta, the street's expecting profitability. I don't know if Zeta becomes profitable this quarter. The Marigold acquisition might have some more expenses that they're going to have to deal with. So the street's expecting about 23 cents of EPS. When I run the numbers, I could see profitability. I don't think we're guaranteed to get profitability. So if they come in not profitable, I mean, the street might not be happy about that. And so I think the guidance and expectation on Mercado Libre historically has beat expectations, but the expectations are usually very high on this company. That this stock has suffered a lot over the past year. So maybe anything is enough to get it to pump. So it will be an important earnings for a lot of these names. Mercado Libre up there right now at 3%. But we're going to have to see what these numbers put up. Apple MacBook Pro models with touchscreens are due this fall. Apple's first touchscreen Macs use dynamic island interface. Okay, I don't really know if people want touchscreens on their MacBook. I mean, when I was younger, I remember buying like a Windows laptop because it could fold into a tablet. But then I grew up and I became an adult, and I don't, I don't know if the touchscreen, like I don't ever feel the need to touch my screen on the Mac. But I guess that's, I don't know, Apple's going to make it cool, I guess, somehow. Looks like Apple is coming out with touchscreen laptops. Tempus also, they've got earnings after the bell, 57.94. That's up 1.13%. Connie says, I love my touchscreen laptop. Yeah, I just haven't had one for a while. So guess we're going to find out. Apple getting ready to secure that new event. I believe their event's happening, March 5th? And Robinhood's having a March 4th event. So to start off March, and then you have GTC in the middle of March. You have a lot of different companies putting out products. Now, SanDisk is also in the news right now. So not only is Citron Research short SanDisk, but SanDisk started like teasing 224, which is today, February 24th. And they started getting everyone hyped up. As you can see right here, 4 days ago, they were like, hey, expect something on 224. And well, they introduced today new portable SSD or solid state drives built for anyone who needs fast, reliable storage for backing up big projects. They're portable SSDs. I don't know why that's super hyped up or important. Now, I don't think the stock's down because of that. I think the stock is down because the Citron report down about 3.4%. Although when I went through the Citron report, it's not as sophisticated as it looks. I mean, it's just using Samsung as a scapegoat here. So if you're a SanDisk bull, I don't know if you would necessarily go bearish here, but yeah, that stock down about 3.8% of the day. And then Micron is down about 0.5%. Uzi says they've had these forever. Well, that's what I thought. I'm like, I'm sure they've had portable SSD drives for a while. So I don't know why that's happening, but that's what they tried to do. For those wondering, my screen is blue every day around this time. Like my windows are closed, my blinds are closed, but still the sun, it's like in a certain angle in my apartment that for like a couple of minutes, usually it only lasts like 5 minutes. It like bleeds through the screen and then it looks like I'm hotboxing. I'm not, just have it. It looks kind of cool though, but it'll go away in a couple minutes. It usually happens when it's really sunny though. It hasn't happened the past 2 weeks because it's like not been sunny. It's been snowing and raining every day. By the way, a lot of the snow is melting in the Northeast pretty nicely. So although yesterday was ugly, a lot of the snow is going away soon, which is nice to see. All right, we got 3 minutes until this market closes. And then we got NVIDIA tomorrow. I will be live for State of the Union at 9 p.m. tonight. There will not be a daily recap today because we'll have the market close, Technical Tuesday, and then State of the Union. So, I mean, quite frankly, there's not going to be any time to actually upload a daily recap, especially because I want to recap the State of the Union. So tomorrow we'll have a daily recap. As always, if you want to know what happened with the article that cracked stocks yesterday, you can watch the daily recap from yesterday. But, I mean, we got a rebound. We got a recovery, and hopefully we can sustain this recovery. Robinhood went under 70 for the day. Wow, 73. I haven't even looked at it in the past hour. It hit 69.22. Now it's at 73.39, which is not too bad. Steve will be live with me as well for State of the Union, and we're going to see what Trump says. SoFi right there up 2.3. Google as well, almost break even as we get towards the end of the day. By the way, Meta and AMD, the head of global intelligence and infrastructure at Meta, take a look at this quote that he gave to Bloomberg. Our ambitions are pretty high. At the scale we're talking at, there's place for all three. The all three that he's referring to are NVIDIA, AMD, and then custom ASIC chips with Broadcom. So once again, selling off one or the other because Meta's partnering with this company or Meta's partnering with that company feels kind of ridiculous. The head of global infrastructure at Meta, and I'm sure the head of global infrastructure at Microsoft, Amazon, Google, etc., they all are realizing they need to use as much compute as possible to be able to get the AI world that they want out there into the world. And yeah, it doesn't seem necessarily bearish AMD or NVIDIA or Broadcom, which Broadcom was selling off this morning just because of that Meta deal with AMD. Broadcom still down in the day, 1.53%. State of the Union's at 9 p.m., most likely at 9:30. I doubt it's going to actually start at 9 p.m., but probably at 9:30. Importers move to force court action after Trump tariff defeat, seeking billions in potential refunds. That's coming from Reuters. Yeah, there's going to be a lot of people suing the government for these refunds. And so Trump's going to have to handle that conversation today as well as he continues to make the broader appeal for tariffs. All right, here we go. We got 10 seconds. Let's end out the day, close the market, and see what we got for earnings. And then we will get into Technical Tuesday. Thank you, everybody, for being here. Tuesday, February 24th, 4 p.m., the stock market is now closed. All right. We have ended out the day. S&P 500, 687.43. Microsoft up 1% of the day. Robinhood was up about 2.24% of the day. NVIDIA, 192.85, up about 0.5% on the day. Software recovered kind of, not all software stocks, some software stocks, but based on some of the reports from Deutsche Bank and Goldman Sachs about how they view the agentic enterprise, they are not as scared about Anthropic killing all these SaaS names, which is why these software stocks got a bit of a bid. And then PayPal right there, that's up 7% of the day based on Stripe potentially wanting to acquire them. American Express, that one was actually down on the day. It took a beating yesterday as well. GameStop was flat on the day. Applied Digital was up about 2.2%. Oklo was up 3%. CoreWeave, great day, up 9%. You had IREN, that was up 7.2%. And then NBIS, up 1.96% on the day as well. Meta bottomed at 629 today. Now it's 639. Google just breaking even towards the end of the day at 310, still red. Tesla had a great day, 394 to 409. That was up a nice 2.93%. RKLB, I still think just below 70. Yup, 69.97, literally just below 70, but still not a horrible day for a lot of these names. All right, earnings. Let's see what we got. It might take a couple minutes to get some of these results. Fslr is moving after hours. No, it's not. It was up 6% during the day. I thought it was moving after hours, but it's not. None of these names really getting a move yet. Mercado Libre, that's a move, 2%. Mercado Libre is up 2%. Up, Workday. I did not want to see Workday go down. Workday is going down. You want to see this name in software not get hit. Salesforce is tomorrow. We need good earnings from the software companies. We can't have them decline any of their key metrics. Workday goes red, 5%. We should be getting Zeta in a couple of minutes. Cava, that's flat. Axon, that's flat. Transmedics is flat. Lucid's down a little bit. GoDaddy's flat. Workday, let's see if that can recover. It's not a horrible candle. Do I have Tempus on this list? I don't. Let's see Tempus. Tempus is down 6%. This is a Pelosi and a Kathy Wood pick. Now, I think Pelosi sold most of her Tempus. She bought it at like 25. So I think she's out of this stock. I am sure Kathy still has a lot of it. Tempus down 5. Workday down 8. Meli's up almost 4. So Mercado actually up 5. Mercado Libre getting some love. GoDaddy's down 1.2. Workday down 9. All right, let's see some of these numbers. These numbers probably have to not be the best on a few of these names. Okay, Tempus beat by 20% on EPS, beat by 1% on revenue. EPS is up 80% year over year. Revenue is up also 83% year over year. The street wanted -5 cents. They came in at -4 cents. That's better than expected. Street wanted 363. They came in at 367. Tempus is down 4. Double beat on the top and the bottom. Guidance might be the issue. Workday is the one that's getting hit hard. That's down 8%. Workday, double beat. EPS 247 versus 232. That's a beat by 7%. Revenue 2.53 versus 2.52. That's a beat on revenue. Not sure why the street's upset about that. There probably might be some deeper issues here. But Workday is down 8%. They are growing 14% year over year on revenue, 28% year over year on EPS. It's not exactly a non-growth name. I mean, there is growth there, especially 30% EPS growth. Workday, though, down 8%. Tempus almost recovering. Zeta, I don't have the numbers yet, but we do have a little bit of a move after hours, 1%, but don't have them yet. Mercado, that's up 9%. Wow. Okay, Mercado Libre had to have some decent numbers. I mean, kind of. They missed by 3% on EPS. They beat by 3% on revenue. Missed by 3% on EPS, 1103 versus 1143, 8.7 versus 8.47 on revenue. Revenue's up 50% year, 45% year over year. EPS is down 13% year over year. Mercado now up 6%. It did hit 9%. Axon is up 4%. Navitas, let me put that on the list as well. That is flat. Again, they had a big partnership with NVIDIA that spiked them to 17, I think back in November or December. Since then, it's not really been the best. Navitas flat after hours. Zeta, not really seeing a move. Axon is up 5. Axon is up 5. Axon numbers, beat and a beat. Wow, EPS, they beat by 35%. Street wanted $1.06. They came in at $2.15. Revenue, Street wanted $7.55. They came in at $7.97. Axon, again, was at, I think, almost $800 a share a while ago. So it has been cut in half. But, I mean, that's a hell of a beat. 35% on EPS is no joke against the expectations. Zeta goes red. Again, it was up 14% during the day. Okay, the numbers should be out. It's 405. 2.4, we're kind of green. 3%, 1750. Can we break 18 right here? That would be better. Let's see, 4%. And, you know, Zeta, if it makes a big move after hours, after a big move during the day, the earnings have to be extra impressive. If it stays flat or dumps, I can understand given the earnings or given the move that it made into the print. Don't have the numbers yet on that. Don't have the numbers yet. Transmedics is up 2%. Axon now up 7%. Fslr is up 3%. Workday down 7%. Tempus down 2%. Navitas up 4%. Okay, a better candle on Zeta hit 4%. Navitas in line on EPS. They lost 5 cents a share. Revenue, they beat by 5%. They came in at 7.29 million versus 6.95 million. So they beat on revenue by 5%. Navitas is up 6.5%. This company is worth 1.9 billion. Revenue came in at 7.2 million, a bit ahead of expectations by 5%. Axon up 9%. Wow, Axon deserves it. Axon deserves it, given that EPS beat. First Solar, I was worried about First Solar. I went through their numbers today. I was a little worried about them. I don't have the top line numbers, but I thought expectations were a bit aggressive for these solar names. First Solar is down 9.5%. Okay, Zeta, do we have the numbers? Yes, 395 versus 379. That's a beat on revenue. Fiscal year 2026, they're guiding for 1.75 billion versus 1.73. Wow. I think that's higher than 34% growth. EPS, they came in at 23 cents. Wait a second. That means they're profitable. That means they're profitable again. They just met the street expectations of 23 cents. That's profitability. I was a little worried they wouldn't be profitable. They are now officially profitable on a GAAP net basis, not adjusted EBITDA, but GAAP net income. Revenue, 395 versus 379. They beat by 4%. Revenue's up 25% year over year. You're not seeing a massive stock reaction, and I think that's probably because the stock ran up 13% during the day. Based on how the call goes, we'll see if things change. Axon's up 10%, but I am not upset as a shareholder, A, because they brought profitability. B, I think they just raised the guide to more than 34% year-over-year growth. I think it's closer to 35%. Another beat and raise, 18th quarter of beating and raising. Stock is flat, not seeing too much of a reaction, but still not horrible. Lucid lost $3.62. They made $522 million in revenue, and they are guiding to produce 27,000 vehicles, not deliver 27,000 vehicles. They're guiding to produce 27,000. That's what you have on Lucid. Let's get some of the coverage on earnings. Let's do Workday, and then we'll keep going from there.
Mike, the stock seems to be falling on guidance, but first to the fourth quarter numbers for Workday, which did come in better than expected at $2.47 adjusted. The estimate was $2.32. Revenue at $2.53 billion, a touch higher than the expectation, and up 13% year over year. But when we look to the operating margin, non-GAAP operating margin for the first quarter, so looking ahead, a touch light at 30.5%. The street was expecting 30.9%. And then the returning performance obligation, we go back to the fourth quarter at 28.1 billion. The street was looking for 29.1. Again, given the concerns around AI, the existential threat it poses to companies like Workday, any lightness in guidance isn't being met in a strong way, with the stock now down another 6% here in overtime. We do have comments from co-founder Anil Bhusri, who is now in the CEO seat as of 2 weeks ago, saying we build Workday to bring innovation back to the world of HR and finance, and AI gives us the chance to do it all again. We'll look for more concrete statements from him on the earnings call, which begins in less than 30 minutes, Mike, to talk more about the company's strategic roadmap, how they've been integrating some of the companies like Sana and Paradox, those two companies that bought for $1 billion each in the last 6 months.
All right, Street doesn't like it. Looks like on the call they're going to have to give some better results on what the Street's thinking about. TMDX, that's up 10%. Transmedics, I don't have the results yet, but I imagine. Nope, I do have the results. Wow. Dude, that's crazy. Transmedics, 608% EPS beat. 608%. 262 versus 37 cents expected. I wonder if that's accounting or if that's legit. Like if they actually were able to get those higher margins. Revenue, it looks like accounting because revenue is only 160 million versus 155 expected. So they beat on revenue by 4%. EPS, 6x beat, but I would imagine there's some type of gain that they're recognizing on the balance sheet. Regardless, it looks really nice. EPS right there, massive beat, 7.4% move right there. Zeta getting a 1% move. Again, not really running, but we're going to go through a little bit more of the earnings. Cava, 11%. Cava actually got hit pretty bad the other day, or not the other day, the other month. But Cava getting some love right here. Let me see if I can get those numbers as well. Again, Workday still red, Cava still green. 11% move. Is ServiceNow down after hours? I think ServiceNow is probably dropping with Workday. Yeah, ServiceNow down 2.5%. Workday might be taking it with them. Let me check Salesforce. Salesforce also red by about 1%. Folks, so Workday said something that's getting the market upset. Cava beat by 33% on EPS, which sounds better than me saying they did 4 cents versus 3 cents expected, but technically that's a 33% beat. And then revenue, they beat by 2%. EPS is still down 20% year over year. Revenue's up 21% year over year. Cava is up 9% after hours. I still have not tried Cava, but from everything I hear, it's some of the best Mediterranean and healthiest food that you can get. Wow, Axon, 18%. Guys, Chris has this in his stock draft. Let me check his average price. His average price on Axon, okay, it's 780, but still, he's slowly catching up there. 516, that's up 17%. You're getting some real moves right there. Fslr, I don't have the numbers, but that's up 7%. Again, I don't have the numbers on Fslr, but that stock is up 7%, so Street should be liking something that they said. Transmedics up 7.4. Realty Income, they missed by 16% on EPS. That stock is flat. They beat by 1% on revenue. Again, most people buy the stock for the dividend, not necessarily for the capital appreciation. But Realty Income, that is flat after hours. First Solar, that's down 13. That one, I still don't have the First Solar numbers, but I would imagine it's not the best. Again, Axon, they beat by 34% on EPS. They beat by 5% on revenue. And that's what the Street seems to be liking right here. They seem to be liking it. First Solar down 14, Transmedics up 9% on the day. Zeta up a little bit, Axon up 15, and then Cava right there up 8% as well. All right, so it's a pretty decent day for earnings. I mean, if you were going to have an earnings where these companies could put up some decent results, it definitely looks like we're seeing that. Let's get into some of these specific numbers, see what we got. Axon raised revenue guidance from $3.4 billion to $3.6 billion. Yeah, that right there, $200 million is not small for a company their size. All right, Zeta, let's get deeper into these numbers. Delivered 18 straight beat and raise, record full year results. Revenue of $395 million, up 25% year over year. Net cash from operations, $199. That's up 50% year over year. Achieved positive GAAP income. It's very important for companies to become profitable. A lot of hedge funds and money managers can't touch companies that aren't profitable. Zeta can now get some bigger flows from bigger companies because they have growth and they have profitability. CEO, we delivered our 18th consecutive beat and raise quarter. This consistent performance is not the reason of single product cycle or an easy comparison. It reflects the compounding power of our system, proprietary data that improves every customer interaction. Our results continue to prove that Zeta can deliver durable, predictable, and profitable growth at scale. Revenue guidance is now being increased to $371 million, up from $362. Oh, wow. Yeah, year-over-year growth rate is being increased to 40% from 23%. My goodness. So growth is definitely there. Revenue guidance now $1.79 billion versus $1.73 expected. EBITDA margins, they're increasing to 22.4%, and they're guiding to positive GAAP net income for the entirety of the year. Positive GAAP net income for the entirety of the year. Stock's really not running because it already ran during the day, but as a shareholder, I can't be too upset at all based on these results. Zeta basically flat after hours. Axon still up 16. Cava's up 9. Transmedics up 7. Mercado lost all of its pump. Lost all of its pump, but it was green. Navitas, that's up 7. Fslr is losing its pump as well. It was up 7. Now it's up 4. First Solar still down 12. Lucid down 3. And Axon up 15. Let's go to Axon's numbers and see what they put out. Looks like guidance for a lot of these companies outside of First Solar is pretty decent, and that's why you're getting some more of these momentum. Yeah, we'll get to Mercado in a second. Axon, 40% year-over-year growth, $797 million, 40% software and services revenue, $206 million of net income, adjusted EBITDA, and $6 billion revenue target for 2028. And I believe they did about 3.5 this year as well. Revenue growth was 33%. You know, Axon doesn't only sell hardware. They also sell cloud software services on top of all the video footage that is collected by the body cameras, which is the main thing that they sell. And I think that's what has allowed them to expand their margins in a pretty aggressive way. We talked about Tempus. They beat by EPS on 20%. They beat on revenue by 3%. It wasn't like a blowout quarter. Sorry, they beat by 1% on revenue. Tempus stock year to date. Is this one up year to date? This one's down 7% year to date. Yeah, I'm not seeing anything super exciting in the quarter. They're still not profitable, even though they beat on EPS by 20%. But that's why that stock is down 2%. Zeta now up 2% after hours. Axon up 14%, and then Cava still up 8%. Mercado, it's been hard for it to hold a pump. That's why I was surprised when it was up 10%. It is not easy for that name to hold a pump, especially because Amazon's not holding a pump and Mercado's kind of compared to Amazon. But still, those earnings were not horrible. Let me pull up these Cava results real quick. Let's take a look at those, as that stock's getting a bit of momentum as well.
EPS 4 cents. That's a 1 penny beat. Revenues $275 million, higher than the $268 million estimated by analysts. Same store sales up 0.5%. That is also better than the 1.1% drop estimated by the street. Adjusted EBITDA at $25.8 million, higher than the $24.3 million anticipated. Its restaurant profit margin essentially in line at 21.4% for the quarter. As for guidance, Cava sees its full year same store sales up in a range of 3 to 5%. Prices were up in the quarter. Traffic, though, was down. I did have the opportunity to catch up with Cava's CFO, Trisha Tolivar, who told me pricing for the full year in 2025 was measured at 1.7%. Traffic trends on a 2-year stack were, quote, very strong. And a reminder, they are lapping 20% plus same store sales growth in the fourth quarter of last year. Tolivar telling me, quote, overall, we're seeing improvement in our trends across income cohorts, age cohorts in different parts of the country. And in fact, we see that and we believe that there's a bit of a bridge that we've been able to create in this K-shaped economy. Some of our best performing restaurants, she says, are in markets where median household incomes are lower. And so we're seeing real strength there. Cava stock also has had a strong start to the year, up more than 15%. Conference calls at 5, and that stock, as you can see, on the move higher by more than 8%. Mike, back over to you.
I mean, again, the theme of Q4 earnings was that companies are beating way better against expectations. And from what I'm seeing today, you're getting a lot of beat and raise. Even Transmedics, it looks like they beat conservative guidance that they put out, which is what the street wants to see, especially for a company that's one of the smaller names. It's under a $5 billion market cap. Cava right there up 8%. Axon up 14%. HP, they also had earnings. That stock is down 3%. They beat by 5% on EPS, 81 cents versus 77 cents expected. Revenue was $14.4 billion versus $13.9. Unfortunately, HP is down 3%, but EPS and revenue were beats, and they're growing 9% and 7% year over year. U.S. House Speaker Johnson codifying some of the tariffs would be difficult. It would be a huge lift. I don't know why Johnson keeps saying the tariffs are going to be hard to codify, because we know at the State of the Union, Trump's going to say the tariffs are super easy to implement. So you got Johnson explicitly going against Trump right here, talking about the tariffs. And that's why the State of the Union is going to be important to see what ends up happening. Lucid down 3%. First Solar down. I still don't have these First Solar numbers. Doesn't look like it's that good. And then, yeah, Tempus, again, incredible growth on Tempus. They're growing at 78 and 80% on revenue and EPS. It just seems like the street wanted something more. And I think that's why Tempus is kind of flat right here after hours. First Solar, $5.2 billion in Q4. Gross cash of $2.9 billion, net income of $14 a share. CEO says our growth journey continued in 2025. As we navigated a rapidly evolving environment, we maintained a disciplined approach to contracting and remained anchored in our core principle of pricing and delivery certainty. I guess guidance got hit on First Solar. I'm trying to get those exact guidance numbers, but it seems like that's what the street is upset about. GoDaddy also had earnings. That stock, which I guess you can classify as a SaaS company to an extent, down 7%. EPS did beat 180 versus 158. Revenue came in line, 1.27 billion. Guidance was not the best. Street wanted 1.28. They're coming in at 1.27, which again is minuscule, but nonetheless, it is to the downside on what the street expected. it looks like that's why that stock is down 7%. Speaker Johnson, tariff ruling brings some economic certainty, but questions remain, and a range of tariff tools are still available to the Trump administration. Okay. We're going to see Trump talk about these tariffs tonight. Fslr, that's up 4.6. Transmedics, that's up 8. Mercado, that's trying to get back up to 3. Axon is the winner today, up 15. Zeta, up 1.5. Cava, up 8. Axon seems to be the winner on this print. And look, they deserve it. Beating EPS by 35%. That is not easy. That is not easy at all. Gross margins were at 57.9%. Their net income is not amazing, but they are reinvesting into the business. They also have $1.7 billion in cash as well. All right, there you go. Well, that is what you got for these earnings today, folks. It was a jam-packed day. You got Workday, unfortunately, that took the hit, down 7.2. That sent ServiceNow down. GoDaddy down 6. Fslr is up 4. Lucid's down 4. Realty Income flat. First Solar down 11. Transmedics up 9. Mercado Libre up 2. Axon up almost 16. Zeta up almost 2. And then Cava up 7 as well. Mike, thank you for the super chat. Congrats to all the Zeta Diamond Hands. Yeah, I mean, look, the stock's trading at less than 4 times sales. 3.2 times sales. I mean, I don't think it deserves to be anywhere near $16, $17. That's why below 14 yesterday was also stupid. But the biggest concern I had today was, can they put up profitability? And they put it up. I mean, I would not be surprised tomorrow if you get some more funds coming in saying, all right, they're growing almost 40%. They're profitable. If they think there's a moat, then that might be a reason for why some people come in. And then you have Axon, Cava, a lot of diverse companies putting up the numbers they needed to put up, which is definitely good for seeing more of this momentum. All right, so we have NVIDIA tomorrow. That'll be the big one. I'll be live at 3:30. We'll have a lot of people here, and we'll be going through those numbers. Tonight, we have the State of the Union at 9 p.m. I'll be live for that as well. These were all the earnings that we had. We are now going to get into Technical Tuesday. For those that are new to the channel, this is when we spend the next 3-4 hours going through technicals. We're going to do all the indices and large cap names first, your NVIDIAs, Teslas, etc. And then we will take audience requests. I will have a Google Doc in the chat where you can see what tickers have already been done. And we will try to get through as many tickers as possible and see what we are thinking in the world of technicals. At the same time, Chad says, bye, Chad. We love you. I know watching technical analysis is like watching paint dry. I get it. But for some of us, we're such big junkies that we need to see what lines go up and down and where the market goes. All right, here we go. It is time, once again, to roll the intro.
I always try. What's up, fam? I always try to get like a sip in right before we start, and I never time it like actually right.
Can I ask you a question?
Before you do, are you getting any echo?
No.
No.
You're good.
Check 1, check 2.
Okay. How long have you known about COBOL?
Oh, did you catch on to that?
I learned what COBOL was yesterday.
From my post.
Yeah, I just realized you were talking about it in your post. But
Thank you.
For those that don't know, Jason spent 20 minutes talking about the IBM short last week. I've
been in this short. Listen, I've been working on this short for no less than 3 years. Like literally waiting. Just so you know.
Did you think Anthropic was going to give you the layup on this?
I didn't know who it was going to be, but I knew what I knew. I'm like, and no, I'm not covering. And it's, you know, coming from the Valley, once you get kicked out or laughed out of a meeting for mentioning Big Blue, you'll never you'll never get it. But
okay, so we're gonna leave that for later.
Listen, Sam. I think Sam buys things, but for IT. But if he had a meeting and somebody mentioned Big Blue, which is what we call IBM, in an enterprise sourcing meeting, or maybe even, I mean, the milkman, even them might be like, what are you talking about, dude? But I used to sell this stuff, not a joke. COBOL, in terms of the language, it's just like, it's a dead language. It's nobody uses it. If you don't know, I'm going on a rant. If you didn't catch on.
Well, let's save it for the IBM TA, because we're gonna take some time and we'll see what you have to say. But no, congrats, dude. You nailed it. And obviously that short ended up working out really well. Let's get into the TA. Let's start off with the S&P. We're going to get through all the large caps first and see what you're thinking. Last week, obviously, markets were not in the best. I mean, quite frankly, I think the S&P is similar to where it was last week when we met, and I'm sure some of the key levels have changed.
It's so bad, dude. It's so bad. Yeah, in terms of the index, though, I'm not stringent. In terms of the index, I will say...
Real quick before you do, Warner Brothers says its board determined the revised proposal from Paramount Skydance could reasonably lead to a company superior proposal, including a $31 per share cash offer and a $7 billion regulatory termination fee. Netflix after hours is up almost 2% because the street Warner Brothers is down 0.5%. Okay, maybe Netflix doesn't end up buying them. Maybe.
Do you trade these things?
I have not, but I know a lot of people that are arbitraging it right now.
Yeah,
Either way, Warner Brothers is going to win, you know?
Well, I used to a long time ago. It's like what you do, it's an options trade usually, and you sell leap straddles. Like, you know what the general thing, like price is, and you sell like both the call and the put, and they'll probably go expired worthless because you don't really want to get stuck with it.
Well, okay. S&P, let's get started. What do you think is going on? Yeah, Warner Brothers say the revised proposal would include a payment of Wow, this is serious. If Paramount's ready to pay the $2.8 billion termination fee, I mean, Netflix is about to get a lot of money for doing nothing, basically. All right, let's go.
So SPY, I mean, here's, you know what? Let me just do, I'm thinking I should do from a monthly perspective. All my SMAs are always locked on the daily, so it might look a little funny right now, but from a monthly perspective, let me just see if there you go. It's just like you're talking about, extremely neutral. So what I can say is we have exhaustion on both ends in terms of, and I'm starting the timer now, exhaustion from both the bulls and the bears. We call this like an inside month. So meaning if this is January, I'll just put a little high that's 697.84. You kind of assume that holds as resistance, but also 676 is downside support from a monthly perspective. And when we get locked into this kind of stalemate, it's almost like, you know, I've been saying this, here's a weekly, I've been saying this term counter trend trades a lot. It's almost like you have to assume that any movement is a counter trend trade, whether it's up or down. And in this environment, until proven otherwise, at the index level, you still really kind of need to assume that support holds, but also that resistance holds. So as traders, you're going to get chopped up like badly. This is death by 1,000 paper cuts if you're literally trying to fade a breakout or trying to take a breakout, because there's no breakout here. Just to be completely fair, this is sideways action. This is prime for like upside calls when you're at the highs, you know, downside, you know, upside calls is in selling calls, selling premium to the downside when you're at the lows, or like really longer dated condors. That said, we're about to get a couple catalysts right now, but that's where we've been. If I drop down to a daily right here, I'm going to actually turn on, I talk about this NFP stuff all the time. I'm going to go ahead and like turn it on really quick. And let me just tune this because I don't use this layout a whole lot. I'll just go 5. But we talked about in terms of an actual breakdown. So the orange lines are still here. In terms of an actual breakout, and this is support, what we need is over 690, 689 and change, like 689.25 definitively. And what we'd be looking for is a full day open and close above this level right here. We don't have anything close to that. Like we have days that are opening on or above, but closing below, days that are opening below and closing above. Same thing for the downside. You need below 682. And then honestly, your trade is just at 675. But that's just that one range. But we're not getting full days trading below 682 either. So from that perspective, this is a very clean tradable range. And I keep dropping down in time frame so you guys can see what this looks like intraday. You know, what we do as traders is we tend to want to trade what we call the edges if you're in a range bound market. And if you did that, meaning if you were going long at the lows, short at the highs, I mean, that pays you pretty well. And this is the market that we're in until we have a reason to move, which we might get one tonight. So I have to say that. And we might get one tomorrow after hours. But here's the trades and here's what they look like. So from here, if we get that trigger high, your upside is just at 697. That's that monthly support, this orange line. That's it, right? 697, 698. Expect resistance to hold still. And then towards the downside, we have that 670. We have a lot of support levels in this 670 area. But again, we're not right now this week we're not at risk of breaking either one of these sides. Meaning like we're not going to break 600 in strength and hold it. We're not going to lose 670 in strength and hold it this week. So not a reason to do anything really, except for wait or maybe sell some premium from a spot areas. All right. So then we're talking about SMAs. We are, now that I've loaded my sorry, let me turn these other things on. We are in terms of below these like simple moving averages. And the way that they're setting up is that we could have like a bit of a flush moment where momentum all of a sudden actually could start to accelerate to the downside. But full-blown breakdowns, you're looking still below 668, give or take. You see 662, probably in the 650 area that you're actually in 660, 661.
Are you trusting any of the little bounces we're seeing every other day?
No, I don't. I honestly don't believe that any bounce is worth buying right now. Here's the cues, and this is like equally important. It's just not worth it from a risk to reward perspective. So if if seasonal trends are gonna happen, meaning like if the seasonal headwinds actually play out, the prediction markets are actually right, and we do get a pullback. Well, I understand that some things are down like 50% from their highs, and your natural instinct is to be like, oh, it's on sale. I would caution that sentiment.
Hold on, people are saying you're muted. I can hear you.
I mean, subtitles.
No. You a lot of people can't. Guys, refresh the screen. Yeah, that's YouTube's issue. That's YouTube's. Yeah, refresh. That should be YouTube.
Hey.
Okay, you're good. Go ahead.
Have you seen my boy found this hula girl? You can't.
Where he found in the house? Randomly?
Yeah, it's actually from Hawaii.
Wow. Okay.
I think it's a nice little.
You know, I used to play with action figures
Trinket.
when I was little. People said they were dolls, but they were action. All right.
So what I was just jumping over to what was I jumping over to? I was jumping over to the cues just because I think that's a little bit more at risk if we actually lose these areas. So unlike SPY, which has SPY has a lot of downside support, QQQ has a lot of upside resistance, and it's literally sitting on it right here. So we are on. So here's the box. We are at the top of resistance. So 1, 2, 3 shots. If you can't make it through on the third shot, usually the failure from the third attempt, 1, 2, 3, is pretty aggressive.
And the level you want is 610 to break above?
I mean, I would like 610, but that's not. Honestly, we're pretty far gone, dude, on SPY or on the Qs. So it is this level, literally 608. So let me just make this month. So just this month here, 608, right? So this is our February, and every non-farm payroll day, I'm kind of thinking, is this the high or is this the low for the month? And so far, what we've determined is that it was in fact the high on February 11th when we got our NFP numbers. It has been. And right now we're just retesting the lows of that exact day, which is currently acting as resistance. So resistance once here, resistance once here, third day resistance. So if we get through 608, meaning tomorrow, if we open above and press higher through 608, we're going to see probably a pretty quick move into 620, 618, 617.50, sorry, to be explicit. But that's it. So I have to be really cautious. Like from there, I mean, that's really the trade. It's not like I'm trying to say, it's not anything crazy right now. So, I mean, for all intents and purposes across the board, it's kind of more of a wait. The issue I have is that if we do lose this area, let me just put this on, then the downside on Qs is significantly higher. So like we can't get over 608 on QQQ, it's like 580s and lower. So it's a bigger gap down here.
So to simplify it, is this short-term bearish or once again choppy? If you had to pick. It feels like it's bearish if you can't get above these levels too.
Yeah, it's more bearish than it is bullish. I'll say that. And even a bounce is more bearish than it is bullish.
Yeah.
So I feel like I'm seeing weak bears, because the other truth and why we're kind of pinned right now is when you look at the charts, it's like we're seeing the weak bears again, because quite frankly, we should have been able to push this lower at the index level up for both Qs and SPY a while, like earlier this week or maybe even last week, but we haven't. They haven't yet, unless you're IBM or Intuit or Expedia or something that's in the AI, eating my lunch narrative. But across the board, we're still seeing the other two tickers, the two tickers that I was talking about needing to watch, and I'll just do this for RSP and IGV. RSP is still strong. Like it's still actually holding all the levels that it needs to hold. And it held over 205.5, which was important for RSP. And the trend is still, firmly intact over here. RSP, by the way, is the equal weighted ETF. So
it's having one of its best years in a while.
Yeah. And so this is the saving grace for the market. Last time we spoke, I think it was here, we were at the low end of the, this was my Monday stream. Monday, we were at the low end of the channel. And it's like, you look for it to hold, but this bounce here is nice. I need to see new all-time highs like this week in RSP, because it's still kind of, it's not doing the greatest right now. It's okay. There's nothing wrong with it, but it's not like, oh my goodness, this looks like it's going to bounce either. So it's because of that, it gets a little bit more neutral, and we haven't had a solid pullback. Now that takes me to, so IGV,
real quick before you continue, do you have a name for that NFP indicator, or is that a custom?
Yeah, no, it's custom. It's just, we'll go to my website, papergains.com. And we have it there. Paper Gains. Yeah. We used to. Holy crap. /links. papergains.com /links. It could be /links.
Okay, we can figure it out at the end of the session as well. But for those wanting that indicator, we'll get it to you guys.
So my bad. If any of my crew is on there, then it's on the website, but it's like $50. Anyways, it's super accurate. But regardless, it's RSP is good. The reason I'm watching RSP is because it's strong is going to tell me whether or not we're actually going to pull back. Because if this does not hold trend, or if RSP starts to fail, then the broadening across the board is definitely weakening. And that would be the biggest crack in the market mechanics, if you will, to say that we are going to get a larger pullback at the index level. So that's why this is really important. It's very important that it holds trend. You don't have to own this or anything, But
because
if you
RSP
want-
isn't heavy tech, it's everything else.
No,
so
it's
if this
equal
breaks
weight.
down, yeah, then we have issues.
If this breaks down, then what you would know is that the broadening theme is breaking down, and the broadening theme is what is holding the market up. So that would be really bad. IGV, we watch from a software perspective, this is the opposite. So it's already breaking down. And so if I see a bounce on IGV, the index, that's what's going to tell me that we're going to get a bounce. So that's why these two things I want to watch. Are we at support on IGV? Yeah, you bet your ass we're at support. But can we go lower? For sure, because I'm not seeing a lot of love here. And because I'm seeing more of the same in both, more of the same in IGV, i.e. weakness, more of the same in RSP, relative strength. No change. If nothing changes, nothing changes. And what we see as a result at the index level is sideways, choppy price action where both support and resistance holds. So yes, this is support. To me, this can go into the 60s, like mid to low 60s. I don't actually mind buying this index itself, maybe low 70s, for the bounce, because it's less risky from a longer term perspective, just because it's an index, it's not an individual stock. But right now we're kind of piercing through general support, which is 78. We're not over 80 by any means, and this could be low 70s, by the next time we see each other, which the stopping point would be in the low 70s, high 60s, just like a hood. Anything that loses, and by the way, doesn't make it to 120, this is where it stopped. We know where they go, right down to 70s, low 70s, high 60s. It's weird how that happens, but anyways, we can move on. So that's the broad sector, very specifically IGV, the ticker, the ETF, tracking the software sector to watch for a bounce if this gets any extended strength, and RSP, the equal weighted S&P 500 index, to see if we're really at risk of breaking down. And for right now, IGV is still weak, RSP is still relatively strong, but RSP is not as strong as it has been. So that's why I have a little bit more caution. I'm more cautious than optimistic.
Okay. Let's do NVIDIA, as that is the biggest earnings tomorrow. And again, guys, we will do audience requests after we get through 10 and 15 of the big large cap names.
So the good thing for NVIDIA is that there's nothing that they can do to this chart that will change the story of the price action. That's the good thing. They can take this to 220, nothing really changes. They can take this down to 170, nothing really changes. I think I saw you. Did you figure out what the average move was on NVIDIA was versus the implied move?
Well, I looked at 16 quarters of data, and 3.9% up has been the historical move.
Perfect.
6 is close. Yeah.
For all quarters, it's 6.7%. I show expected at 5.6, but that 16 quarters is how many years? 4, 8, 2. So 4 years.
4 years. Yeah.
I don't even think we need 4 years of data. And you're getting how much?
3.9 up.
3.9. So what you would do is you would turn that into a dollar amount. So percentage is great to know, but it's relative, especially when last time NVIDIA made major moves, it was in like the 70s. So 3.9, $200 up, right? Let's say it has a big move. This is what I mean. Let's say it does a 9% move, 209. It's not doing a 9% move. It could, but if it's 209, 210, that's what that looks like. It's probably not going to hold that, which makes it still neutral or like a weight. Downside, look, 4%, 185. We were just there last week. Downside, large, 10%, 175. Doesn't change the story of this price action whatsoever, any way you slice it. The only thing that would happen, like that could change it, is the price action after the report. So expect some pullback. And this kind of situation is exactly what I said would need to happen before. And so that really kind of, you lock this 212.27, not within range for earnings, but if it gets up there, I'd expect to pull back. And then if it does pull back, if it can hold 195, give or take, that's going to be really important. And that sideways, if you start to see accumulation over this 195 post earnings, that's a bigger tell. So for now, and I will, are we doing trades today? Are we modeling trades? You don't do that.
We can at the
It
end.
might take, yeah, okay, it might take longer. I would say I'm not an iron condor guy for earnings. There's a definitive way to trade this for earnings though, and it's selling near dated calls and near dated puts and buying longer dated calls and longer dated puts. Not a condor. This is called a calendar. Specifically, this one's probably going to be called a double calendar. And if I get something like that, my gut tells me that I can actually get a pay scale that will pay me probably up to 235 and down to like 150. And I could give a shit where this goes and I'll probably make money. That's my gut, but I'll model it tomorrow in real time with the crew.
And usually a stock that's range bound is where that option strategy becomes a lot more productive.
No, this is specifically for earnings because it's like you get that earnings volatility crush. You don't want to trade earnings without being hedged with options. Right. And I don't mean by buying. I don't mean you think it's going to go up, so you buy a put also, like you buy three calls and one puts. That's like not happening. I mean, like sell something against your options to make it a spread trade.
What does your gut say? You think 180 or 200 looking at the charts, or it doesn't matter?
I mean, it really doesn't matter, dude. My gut says that maybe they don't. My gut says that Jensen is like one of the greatest CEOs. So even if they miss, we might have a knee-jerk reaction to the downside, but during the call, he's probably going to pull some rabbit out of his hat and talk about the next reason to get excited about NVIDIA that nobody's thinking about, that ramps it and gets bought up in the after hours or by morning. Also, the inverse is true. So like even if they have a huge move, I think after earnings it could look really good. Go ahead and celebrate, but like be super cautious by morning if you're not extending beyond the highs or the lows. Like if the lows hold, they're usually going to hold. I don't think a real trend is going to show up until next week on NVIDIA. So wait for the earnings move to go. Wait for this February 27th kind of expiration to burn off, and then start looking at it next week.
Okay.
So I think flat.
Yeah, and I honestly agree. I think we could pump to 210, but we dump right back to 190. I think it's hard to
just like that. Yeah. Tesla, I don't like, man. So I think that we can try to retest this 415. But I don't really like Tesla. So I've sold those $400 calls. I'm now actively hedged to the downside also. And I'm seriously thinking like, well, does this fit my...
What do you mean actively? You mean with the calls or with puts?
Puts.
Or? Oh, wow. Yeah, puts. Okay.
And so like, I'm like, do I start exiting? Because I have a general theme for my portfolio that this sits in. And it's like, I've had a good trade on this. It's been really good. I think it's got some risk to the downside, especially if we get a rejection of this 415, which is the prior highs here. Yeah. It's weak, but it's not really breaking down, but I see the risk of the low threes on the lamest of stupid headlines. Like for whatever reason, if the market wants to take it down, it's kind of at risk of being taken down. I don't more so than at risk of going to 500 right now, at least right now. And honestly, if I close it out and I get back in at 450 or higher than 450 and I miss out on this $40, like I'm really not going to be losing any sleep on this if I end up selling the lows and have to FOMO back in, at least not for me. But yeah, this one, you got to assume resistance holds. Unfortunately, that means that on this Tesla chart, 415 becomes resistance. So as of late, that has been, you can even zoom in. And the issue here is that here's this 415 area, and we've had, support, resistance, 1, 2, 3 resistances. Today we opened well below off the 200-day, but even the high of today, all we're doing, there's a little session gap over here. All we're really doing is kind of filling some market imbalances near term. That's essentially filled here, 410. And it's a bit of a counter trend bounce. So, I mean, it's possible that we could retest this 415 again, but I haven't sold it yet. I'm hedged. This one looks more at risk than not to me.
Okay. Amazon.
Actually, same. So I wanted more bounces, and we're okay, but these bounces are just exceedingly weak. It's not losing the absolute lows. 204 here is nice, but if this can't get over, essentially this. So here's the earnings dump right here. Here's the earnings dump, and here's the pop into earnings. That's 212.81. Funny enough, that's like a 50% retracement from earnings right here. And where it's stopping is like half of the earnings dump. So for those reasons, I don't really like it, but it's stuck here. I think, look, I bought this slightly higher before, had some good trades. I like it, but I have to look at this right now and be like, would I buy more right here, right now? And I'm like, I just am not thoroughly convinced like that. I'm not thoroughly convinced that I don't get deeper discounts later. Does that make sense? If you're an investor and you have at least a 3-year time horizon, I think you're totally fine. But I also think that on largely any Mag 7, but I also think that you should expect that we get deeper pullbacks later on, and be prepared to buy them again. So that's kind of where I'm at. It's more not going to close, but it would be what I'm talking about is like de-risking and changing the position size just so I can buy more later if it can't get over this 212.5, 213.
I agree with you. I also think, as bullish as I am on Amazon,
it doesn't fit the theme.
Well, that and they're going negative free cash flow. Like,
they're the only Mag 7 that actually missed. And so I'm like, they missed their own guidance. And so that's kind of like, I don't know if you guys know that, or like, it's just I just
think the street's not going to reward negative free cash flow yet. Eventually they will.
Yeah.
Maybe not now.
I don't know where my thing went, but yeah, I mean, I like it, right? And I liked it from a lot of perspectives, but what the theme is in the market doesn't fit the reasons why I liked it. And so because of that, it kind of puts it more at risk. I'm looking at this. Yeah, like, okay. So of the Dow 30 that reported, we have 27 that have reported so far, 25 beats, 2 misses. Earnings in general across the board are good. This is compared to their own estimates, but Amazon's missed. And you're like, really, dude? Whatever. And American Express. So Amazon and American Express are the only two that missed. Overall, it's good earnings, but that's kind of where we are.
No, that is fair. Hoodie, are we going to the low 60s?
So we're going to get a lot of these. I have not seen any posts yet. I texted you the other day. I was like, do we do it? Because I'm like, I want to do it. I want to buy it again. But we're going to get the almighty death cross posts across the board for many things, including our beloved hoodie. Here it is. So the 20-day or the 50-day is the blue line on my screen. The red line is the 200-day simple moving average. This is the it's so funny to me, dude. This is a retail sell signal. We're not really retail. We are technically retail, but we're not that kind of retail where we kind of know better. But yeah, so per the popular retail indicators, right here, right now is when you would sell Robinhood, not like up here or definitely up here, which is that's such a lagging indicator. And you guys might know by now, if you don't, if you haven't been around that long, I laugh at this because a lot of times you end up selling the actual low,
and the death cross tends to be the low from what you see.
It tends to, especially because it's such a lagging indicator, and especially when you have, here's the truth, especially when you have momentum like this, because make no mistake, this is one ugly chart, but it's so lagging that the momentum, the sell was over here, and here we are nearing a bit of a buy zone. So to me, it's like, because of the market situation, I'm not sure. It's like, I'm not going to go out and automatically buy this. It's hedged to it's hedged like crazy. But if I see a big dip, then what's this from? Oh, this is, did I do from inception lows? If I see a ginormous dip that's really retesting in here, I might seriously consider this on some violent pullbacks. It'd have to be below 60 though.
Yeah, that would be where it's complete death.
Yeah, I would want to buy the absolute death, because we're just sitting on my level. It's not like it's not gone anywhere. So if this falls out of bed, in the next month or two, I'm definitely going to be more interested. And it could be a violent fall out of bed, sub 50. That's kind of where I'm at. The 60 is a retest of here. I don't think things are going to be that clean. I think it might breach that, which I've been saying. So the next dip, my point is, the next big nasty dip, I'm buying it. That's all I know. I'm buying it. The next big one.
Okay. Palantir.
It's looking pretty weak, dude. So
it didn't recover with the rest of the software today either.
Neither did Hood, right? They're just the high beta. This is center stage, kind of like in the impact zone. 115, we haven't seen it yet, so that's where I had it before. Let me just pull this out. I don't know if my charts are a little different or what over here. Regular.
Again, the news after hours, guys, is that looks like Netflix might not get Warner Brothers. That's why that stock is moving higher.
Yeah, I mean, 115, 120 is okay. Here's where we are. So similar to Robinhood, where we're testing the lows 1, 2, 3 times. There's no such thing as a triple top, right? Is the idea. If I inverse the screen, it looks a lot better. That's the truth of the chart. Yeah, sub 125, if you're losing in strength, is going to be kind of rough. If we get a big pullback, I didn't want to say 85s last time or the first time we brought this up, but that is in truth like where it would be in the 80s. Over here is kind of more watch. I think you could get, if this doesn't break, you could kind of get like a bit of a sideways and then pop up. But this is what I mean by, even if we get something like this in March, I would be more inclined to use that as some kind of exit liquidity if we don't start making new highs post March. That's kind of where I'm at. But you're going to get your death cross on Palantir if it doesn't get its act together real quick. Also, you're like a couple days away.
Okay.
I like the dips post death cross. So.
Yeah, I mean, hopefully, if we do get the death cross, that also is closer to the end of some of the pain. Can we do AMD? Because this had a big fundamental catalyst today.
Yeah, so the charts were looking like 150 or 150s. It didn't get there and still weak. And then we got a headline today. 227.20 is that prior all-time high from over here, which has been kind of the pivot, the main pivot. Yeah, this one remains like stalemate. So again, if this locks a lower high, the issue like this morning, I mean, first of all, we're gonna have NVIDIA earnings in 24 hours, which will affect AMD also, but this did not change its trend. This is more like it ran into another level of resistance. Even from here, like this breakdown is a bearish retracement. So it's still stalemate, but it's leaning more not long than long right now. It needs to show me a lot more. Again, 227 remains the major pivot on this guy. There's consolidation, but it's yeah, we've seen new lows already and we're not seeing new highs, meaning like if this was the last low, we already kind of breached that, where we just did a little look below and held it, but we're not like testing the highs here. This is kind of where we are on everything. It's like you're a sit and wait. Dips are getting shallower, which is nice to see, but we're not seeing any real strength moving forward. So I think this is a fundamental catalyst. So you have to look and see what does the price action look like moving forward. So I will tell you 27.5 is the main pivot. And if that, which is currently resistance, can become support moving forward, then it's going to look a lot better. But not really before then.
Might as well do the meta after AMD.
It was so close today, dude. Like it was so close to seeing 600 again.
That's when you get interested, right?
I already got interested. No, I mean shorting. Which you probably didn't want to see here. But like it, so tradable ranges I have here to here, right? So 633 to 685, 690s. But this morning it opened at 630. This morning was a weird morning. It's like we opened at the lows and we instantly kind of pushed lower across the board. And I'm thinking, well, I actually came into the market today thinking that we would have a bit of a rally because we were already at the lows. And then instantly it started to go down. And I'm like, oh, okay, I guess not. And then, you know, if you had waited 15 minutes, it's like, all right, yeah, we actually are going to get a bounce to the highs. And that's kind of what happened. But the bounce is generally pretty weak. I think there's a lot of uncertainty between tonight and what time is the State of the Union?
9 p.m.
9 p.m. and tomorrow's NVIDIA earnings that I think it's very likely stalemate for right now, but we'll see. So at 635, if this can hold and start to press higher, then I actually do get interested more in a long trade back into the 700 area over here, but that's resistance. That's a trade. It's not an investable range. It's just a trading range. And that's if this 635 basically holds. Right now it's holding, but I'm not seeing enough interest from buyers to go that route. And in Meta's case, I was open to trade either direction, but it just super muted. If it loses 630, okay, cool. We can take a trade to the downside. But if it loses 580, then we're in bigger trouble. And that's more like a short swing kind of setup. But it's not like a sell your stock or anything like that. It's just like, oh, we're probably going to go a bit lower. And it's tradable. But this one could go either way because of the setup. It's a very, like, what's the word? Not steep slope right now. Like if I just connect these lows, this little dip, I mean, you could say it's like this. So this I think you could see that, but it's not and that's what I'm talking about. It's not a big one. It's more like this, if that becomes your kind of trend, like that, right into that 690 resistance, at which point I would expect that to be resistance and it to hold and then to come back down.
Okay.
Until we have like real clarity at the market from the market's perspective. Which,
yeah, and I feel like Meta's the same with a lot of the other mega caps, right? Where it's just like,
yeah, the only one I'm interested in buying because I didn't have a large position and I think you're at a better level is Microsoft. I like Microsoft long term. And I've been saying 375. This morning we get to 380. And we're basically there. So I mean, this becomes a momentum trade downside. The problem with Microsoft is because it's so center stage, between software and, can the products that I sell be replaced by AI? And also one of the companies are spending a bunch of money on AI CapEx, which is not in question, by the way. It's just whether or not they end up making money long-term before they spend too much. For Microsoft, honestly, I don't think that Anthropic is going to go out and displace IBM, but I could easily see Microsoft doing it, if that makes any sense from a long-term perspective. I don't think AI is going to eat Microsoft's lunch by any means. And all the companies that are being like speculated as potentially being, eaten alive. The truth of the matter is that I would think that someone like Microsoft is more than well capitalized to be able to actually be the one to produce a product and or offering, and actually the customer base to distribute that technology and get it out there and actually be the one at the end of the day that takes over a lot of these other business models.
Do you still like this under 400 or?
Yeah, I like it. I like it for the long term. So meaning over 3 years. I don't have a problem with Microsoft if your intention is to hold for 3 years or longer, period, end of story. Even into further dips. But like you also got to be aware, it's like you're not holding very well. And it is in the blast zone because of what it currently does. Do I believe that that's going to be the story at the end of the day? I don't. But in the meantime, the market does like really stupid things. And this would be one that is better discount than anything else in the Mag 7 to me from that perspective. But could it also get a bigger discount later? It could. So I just can't be ignorant to that fact that come late Q3, we could be seeing lower prices on a lot of these things. But in the meantime, I think it's a possible tradable bounce. From a near-term trading, I need to see over 404. We're pretty far away from that right now. And everything else becomes counter trend bounces to be very clear. And 404 is actually more like resistance at this point, which is even below the 20-day SMA. I think of the Mag 7s, this is probably the most actively shorted one right now. Yes.
No, I believe you're right on that. I saw that stat yesterday.
But for all the reasons that I was just talking about, albeit at the end of the day, if Microsoft ends up having an Amazon and Google moment, what was it? Amazon, Google 2022? Yeah. 2020. I think Microsoft could be the one that has that moment, but at the end of the day, becomes the winner for all the reasons that I just mentioned already.
Okay, let's do Rocket Lab. And by the way, guys, Zeta flat after hours workday down 9.
Zeta what? Zeta flat, dude. They were doing it so well. 14.
Workday's down 9. I think that's hurting a lot of the other SaaS names right now.
This is what I'm talking about, though, right? Like the punishment of the SaaS names, and there are names out there. Sorry, is it okay if I do a little tangent?
Yeah, good.
The punishment on the SaaS names, I think, is getting a little dumb. Is it justified? Sometimes. Did you trade through COVID, through the downturn of COVID?
No, I lost money during COVID.
Okay, so this feels like
I had $10,000. I lost all of it.
This does not feel like a Liberation Day moment. This feels like a COVID moment where the charts, honestly, they were screaming already weakness, and an article like the AI anxiety article ends up just being fuel to an existing little burning fire that was already burning, right? And it just kind of explodes the thesis or the rhetoric. And it's like, in those moments, it can get worse before it gets better. And so that's what I mean by like, these are bad, but are they overdone? Probably, if your time horizon is long enough, but this might only be halfway done. And so, you know, a lot of things cut in half right now. I think it's legit possible that they could get cut in half again. And so it's like, the market's dumb sometimes. And so I'd rather just kind of get out of the way. This is not a bad company. ServiceNow is not a bad company. CrowdStrike is not a bad company. Palo Alto is not a bad company. I like these companies and their technologies. And no, I don't think something like a CrowdStrike, or I think it's laughable to think that CrowdStrike or Palo Alto Networks, sorry, I'm on a tangent, is going to get displaced by AI. But the charts were already weak. And so it's like a guy named Amit once called me and said, dude, you need to start reading the room better. And it's like the same thing. It's like, if you own these stocks, you have to read the room of the market. This is what the market's saying. They just don't like them right now. And even though great companies, honestly, best of breed technology, in this moment, they're weak as hell. And so like, I might be getting better prices later. So I'm going to hold out on things like this. Or if I've bought lower, I'm going to trail out, because like, I don't know. I think it's dumb. And if I can get a better discount because the market wants to be dumb, I'm all about that. Sorry, that's my tangent.
I think it's a fair point. And also, while you're speaking, Benioff, who has earnings tomorrow, he is trying to change the narrative right here, as he tweeted, excited to work with the entire top Anthropic team to bring this incredible vision to life, yada, yada. Like, he's obviously trying to make people to believe, no, they're not going to kill us. They're going to work with us, which is probably how it's going to play out.
Yeah.
But as you said, in the short term, that doesn't mean it can't get.
Yeah. There are some stocks, like I was going through my portfolio earlier today, and I'm like, this is dumb. Like, there are some stocks, like, look, I specifically Crowd and Palo Alto, they're not going to be losing money. The question's not whether or not they're going to be losing money, really, to me. It's just whether or not they're going to be growing at the same rate, because the multiples are high. They're extremely high. And so what I'm seeing is just multiple compression and loss of multiple premiums. It has nothing to do with current company like metrics. It's just, what is the market willing to give you as from a premium perspective? Right now, the market's really not willing to give many premiums for software growth in general.
Right. Rocket Lab, what are you thinking of space?
You know, so there is a theme in the market, and we talked about it kind of at length. I talk about it all the time. We talked about it last week, and that is that, you know, it's about AI data center spend. It's about energy. It's about like the commodities fueling that energy requirement. If it doesn't fit in the thesis or the theme of the market, then I would expect all these to be neutral to bearish right now, especially if you're high risk. And so Rocket Lab doesn't fit a thesis unless we're going to go to war, or like in this moment, the market doesn't have a reason to go long Rocket Lab. That's all I'll say. So it's pretty weak right now. So I had 60. It already had 60. Is it holding? Look, it's on edge. It's holding 68.5. It's not super strong. So what this needs is another storyline. It needs a revival of this storyline for the stock. And I'll see that in price action when it starts to show up. It's holding right now, so it's more neutral. It's neutrally, this is more neutral than bearish is true. But like, even if we get a pop, the problem is if we get a bounce and we can't get back over 70, it's about regaining momentum to the upside. Can't get over 76, 70, whatever. We're in more trouble. We're more at risk of retesting the lows. And if those lows weren't good enough, then we could see lower lows. So it's this one, you have to pay attention to the theme of the market because it's such a emotional stock. where like if the market decides to turn on them, it's extremely high beta. I don't hate it. Are
you thinking of buying at all at these levels or no?
I think across the board, it's like I would think about buying if I saw deeper, right? Like if I saw panic and mayhem on the streets, this is not panic or mayhem. This is actually pretty orderly, right?
Yeah.
So in this environment, I need oh my God, I'm selling everything kind of discount from everybody else. Like if they do that, then yeah, I'm buying, right? But I'm just seeing basic stuff. So like if you have the position, not really a reason to sell here. If you don't have a position, not really a reason to buy here. And that shows up in the chart where it's very neutral. So again, another sit on your hands, wait. If you own it, I wouldn't panic or anything like that. It's neutral. So we have earnings coming on end of February. So like next or Thursday. So Rocket Lab has earnings coming Thursday also. I think in this case, you might get a little pre-market bounce or pre-earnings bounce, maybe. But you got to wait to see through earnings. I would not do anything to my stock here into earnings, though. I would just sit on it and watch what it does. I don't know what the typical earnings move is, though.
ASTS, real quick after this one. I think probably the same trend for you.
Yeah, very much. So what's the space theme right now? Like, what's the story there?
I think literally the only story is SpaceX IPO. I mean, there's a lot of narratives, but that's the big one.
Yeah, well, I think that narrative's taking a big back seat right now, right? It's just because that narrative's taking a back seat, we're just not seeing the momentum in the stock. There are stocks. So again, this is exactly the same. Neutral to ASTS is more bearish than Rocket Lab, quite frankly. But it's they're both heavily neutral. So a move can come, but the bounces, if you see pops in these stocks, I would be more concerned about not breaking the recent highs than if there's a bounce happening right now. I would be more concerned about that.
Yeah, and I think the data center and space theme is not a theme.
Dude,
at
that's
all.
so wild.
It's a story, and it's a story to pump the SpaceX IPO.
Yeah. Here's one of Roy's. Shout out Roy if he's there. I watch this from time to time anyways. It's in small cap. Mike is not micro, it's small. I don't know what's going on with this thing, but it's actually doing really well. Air test systems. But this is kind of along the lines of there are certain things that like it's a picks and shovels right now. This is test equipment. I know that. I don't know. I think it's around EV stuff too, but I'm not an expert in the stock at all. But the picks and shovels of the themes in general are doing well, right? So like KLA Court, like the idea of are these companies spending money on the build outs of whatever it is that they're building? That's not in question. So if you're and because of that, the picks and shovels, LRCX picks. I haven't even looked at the stock. I don't know. Oh, there you go. These are test equipment, picks and shovels. This is your Micron. This is, dude, are absolutely amazing. Corning, dude. Yeah. Our crew is just like, we got a guy who's banking like $250,000 a day on this friggin' stock right now. It's intense. Just holding like positions.
Well, if you're in calls on these names that gap up 3% every day, I mean,
yeah, it gets intense, right? And it's like you have to keep rolling. Anyways, these are thematic for AI generational builds, which I do not believe the retooling of the data centers and this generational data center build out, that is not in question by the market at all. So I think just to be crystal clear, the market is not questioning that the spend is happening. The market is only questioning whether or not the companies spending the money are going to be profitable in time before they spend up too much money. And that is it. So if you're not on the right side of that thought process, this is on the right side of that. Micron's actually on the right side of this. What's not? Like IREN, these are neutral, but like the NBIS, what's going to happen? These guys don't have like giant moats to me. They're like, okay, But they're not like, they might get a little, I still not texting you. They might get a little love, but it's about like, what are they going to do with this? Like the money, it's there. So these are neutral, but not like a massive bull case behind them, other than like GE Vernova. This is super simple stuff, right? Power is freaking everything. This is all-time highs yet again, $880. This stock you got for free for owning GE pre-split. I mean, that's insane, right? GE itself, like all-time highs yet again. Power is like everything. The crews here like Bloom Energy, didn't even look at it. My God. VRT.
I mean, a lot of these infrastructure names have been, I guess, the
yeah
year so far.
Look, but you think about the story behind what's going on is that the market has no question whether or not the generational data center build is happening. It's happening, period, end of story. So that takes you to like the picks and shovels, and you don't have to pick who the winning CPU or semiconductor is going to be in that instance, because no matter what, all of these companies are going to win. And so it's the easier catch-all kind of trade. It's like, and there's a lot of other stuff behind it. If we have sticky inflation, like, I mean, oops.
Real quick before you continue, on RKLB and ASTS, what were your entries on those if they get bad enough?
Sorry, I'm doing my skip around thing. So like, so it just, there's no entries because there's no new trades. So if there's not a reason to take a new trade, I'm not really going to say, oh, here's an entry. Sometimes stocks are literally just don't do anything. This is a don't do anything. So it has to hold here. I mean,
but something gets stupid, like below 50 on RKLB, you would say?
Oh, okay. You want to do that? Let's do it. I think some of these you have to take like from inception. 40. So that's the stupid number. 5150. That'd be funny to have a cost basis 5150.
What about ASTS? What do you think is the stupid number on that? I remember this was 35 back in September of last year.
Yeah, the problem with these is if I say a stupid number, like, I mean, dude, what if the stupid number is 0? Same, 50.
That's not that crazy. I mean, that would be ugly, but
yeah, like I think I don't think you see 50 like in the next couple months unless there's something seriously wrong. Like I don't see a reason to trading. You go level to level, right? I can give you these levels and you can plan them out, but like in reality, stocks just don't go. They don't go like that, right? Like that's not what happens. Like you could get a little bounce, and then I think you could see 66, and then you do this, and then something like this. I think that's more realistic, which becomes 50, which is this area here to test. But we're so far away from that for me to start saying those kind of numbers now. We can say it from a planning perspective. Like, you know, I said it on Hood, it's like low 40s. Palantir would be 80s. You know, but there's no reason for that to happen just yet in the charts.
Okay, let's finish up with some of these other large cap names, then we'll get to audience requests. SOFI, which is not large cap, but
so I think I said last time like 14s, right? So it's same kind of maybe 15s if you're lucky. But we're gonna test this. You remember where our broadening range starts? The thing is, like, I mean, this is brutal.
I mean, it has been disgusting to see this stock price this year.
Yeah, so the numbers that you just asked for, like things like that, I don't think we would see something like that until it's like September. And so like that's many months away. And that's only if, right, we actually roll over. So 16, which means that there could just be more downside. Actually, okay. So it's in the chop zone now, literally. So similar box to Meta. So this is in it, and it's 17. My bad. Was this a higher high here? Yeah, it's 17 for the downside, but that has to hold. And then your bounce is literally just to $20.67. So I think like this. Boom,
No.
boom.
Feels like
Boom.
it'll move when all fintech moves together. And
Yeah, until you get there. And then if this is liquidity, so that's what I mean. It's like this is L-shaped recovery. And in some of these liquidation moments or liquidity grabs, you might get some nibbles closer to 15 or lower if the market's having a panic attack, which is, I want to have cash available to buy the panic attacks. Like really. The next one.
Let's do Mercado, by the way, down 6% after hours. So the call.
Dude, weren't they just green?
Yeah, they were by 10%.
That's rude.
Bitcoin. What are we thinking of BTC?
Dude, okay. So see this here, this blue and white line before I go to Bitcoin. This is a 20-day and a 50-day simple moving average. When they're doubled up like this on a lot of stocks like that, and you get these wicks, that's literally what we just saw on AMD.
Yeah.
Right here.
Oh, wow. Oh.
Just like that. And a lot of other names. So that's what I mean. Like, dude, if we get this stuff and they don't continue to press through, the one saving grace. Have you seen Apple, dude? I'm not going to take over. I'll do Bitcoin like you're requesting, but just Apple is not in ground zero for any of those thematic storylines that we were just talking about.
But it's safe, supposedly.
It has zero AI exposure, right? For your stock picking competition, it's helping you out right now, like a lot.
Yeah, it is.
It's safe. But I mean, how safe is it? I think the tariffs are done. Actually, like I don't think because of what happened last week. I don't think there's a single tariff headline that could realistically hold us down from here. So I think we've seen the worst of the tariff stuff at least. It was as bad as it's going to get. He can try to do whatever he wants, but it's not getting worse. I mean, so Bitcoin is very much stuck also. It's 53,711 is the low end of this prior consolidation, which right here is what we're talking about retesting. Here. So I'd say like it's close to 55 for right now. And that's where, I mean, everything's kind of coming down to. If these next kind of like moves to the downside are weak, then that would be a better sign. I don't know. The only thing here is that we're basically in a crypto winter. It's not like really worth asking, are we in a crypto winter anymore? Because I think it's like, see, if you looked around, yeah. Again, it's a nice spot, but this has to get through 70,000. And if you want to ask me my crazy number, it's like, it's got a 3 handle in front of it. That's where I'm at.
So 30K, you think we're getting to?
I think if you take the seasonal trend, if it really does the typical 70-80% pullback.
Dude, it was only 15 back in 2020. That would only be double the lows of 22. I mean, that would be ugly. That would be very ugly.
Oh, that's 80% at 25. From here to here.
125 to 30.
That's 76.
He's so bad.
Dude. Like this, so it went 70K, it went 70,000 to 16,000 for a 76% drawdown over there. This here that's 80%. It did 18,000 to 3,000 in 2018. That's its 80% drawdown. That's that's what crypto winter looks like, and that's more like, yeah, that's down there.
Yeah, that'd be nasty.
But look how long that takes, right? And so, like, if that's the case, what we're talking about is basically right here. Like, we're talking about if we go into like full-blown crypto winter, Bitcoin is basically like right here. And so, yeah, you might think that you did good for a while and it goes up and you probably make a decent chunk on a counter trend bounce, but then it just crushes you.
Do you think Bitcoin can go to 30 without the S&P taking a 10% haircut? Or do you think they probably have?
I mean,
because last time both fell together.
That's a hard call. Without the S&P taking a haircut, like, at all.
I mean, yeah, the S&P could fall a couple percentage points, but I feel like for Bitcoin to fall by 50, the S&P has to fall by minimum 10. Or is it so detached and everyone's so, I don't care about crypto anymore, that people will buy NVIDIA and the NASDAQ and dump their Bitcoin?
I kind of feel that way, but I could be wrong.
If that happens, then like that's really sad, because then it's not a market drawdown, it's a Bitcoin drawdown, right?
Yeah, yeah.
Which is the opposite of 22.
Yeah, I'm not good at selling this stuff. I mean, I don't sell at the highs. Last time I sold, I'm like, I don't have as much to sell anymore anyways. Like, I could, but I don't need to buy anything right now. But if this starts losing 50s, I'm like, shh, I don't want to take another 50% haircut.
That's true. It has already fell 50% without the S&P. That's fair. That's a good point. It's already dropped 50% without the S&P dropping.
It has, but yeah, so that's it is already detached to that end. But I don't know, it just doesn't, what's the guys like to talk about Kramer. I don't know if Kramer says this, but being down 50% from the highs it doesn't really matter that much. Like, what matters is where it's going, not where it's coming from. I don't know who said that, but like, that's a saying that always sticks in my head for like forever. That's what matters.
Yeah. Okay, so let's get into rapid fire. It'll be 2:30 on the clock, and we will get through as many.
Oh, we are going quick today, huh?
Yeah, before we do that, I just want to play this quick clip around software and Anthropic, and then we'll get into some rapid fire.
Business models or take their customers. So at an online event earlier, Anthropic rolled out new tools for enterprises and what it calls knowledge workers. Executives say that it's going to make employees more productive, and other companies help them toggle between different AI applications, or regular applications rather, using AI agents, and then takes the use case well beyond just a chatbot. Investors responded with a huge sigh of relief. We saw in the markets, you mentioned it, Anthropic's partners also got a boost, as they were mentioned on this live stream. During the event, you saw Salesforce, Intuit, Thomson Reuters, you got Spotify, FactSet, all popping. Goldman Sachs noted the move looked a bit more like short covering than any sort of wave of new long-only buying. But tech investors have been anxious. They were especially anxious ahead of this event. That did add to some of the AI-driven sell-off this week. It's a very different reaction than what we've seen around some of the concerns around Claude's coding tools, which have really crushed the software sector for weeks now, guys.
Yeah, for sure, Kate. Obviously, these companies can react and adjust, and they're trying.
So again, the software name is really catching that bid because of AI. The other headline here that I thought was also important is that Anthropic is not going to ease up on their ethics, and they don't want the military to use their stuff.
Has been
What do you mean their ethics?
Hegseth, rather, defense secretary, talking about how they're going to be using their technology in classified environments. So the latest we're hearing from sources is that the Defense Department has given basically a Friday deadline to comply. They're saying that, okay, either you give us our technology without questions and say we can use it for classified government operations, it goes back to Venezuela. That was sort of the brush up against these two units, saying that the government wanted to be able to use it without questions. Anthropic pushed back, but Hegseth's saying you have Friday to decide. If you don't comply, we have two options. We're either going to label you as a supply chain risk, or they're saying that they are going to be
using or invoking the Defense Production Act. So, two extreme outcomes here for Anthropic. And this is one of their major enterprise customers, government. They've got a $200 million contract. We're also seeing others, including XAI, really trying to fill that void and come in. And
it looks like XAI is going to be the winner. By the way, I saw a bunch of Anthropic employees tweeting today how proud they are to work at Anthropic because of Dario's decision. So it does look like that Anthropic's probably done working with the DOW.
Well, good news on Zeta is you get a little follow through.
Get a little pumpy pump.
Yeah. It was a little rough there for a second. Get a little pucker. Is he going to stay?
They probably said something on the call that got the street excited. I'll try to find out. But yeah, that one's moving now after hours. Again, I really think Zeta should be nowhere near below 20. So hopefully it starts kind of recovering back to where it was in January.
Yeah, we're going to need to see that. It's dead center, dude. It's in the software name. So
that's the worst part about it. Yeah.
I mean, that is it. Like, that is it. If we didn't have that, could AI eat Zeta's lunch? I mean, I honestly don't know enough about the stock to say that it couldn't. Do you?
I don't think AI is commoditizing it in that. I mean, their moat is first-party data. Is there a world where AI can make it more competitive? Yeah, but their partnership with OpenAI to me seems like a really synergistic interpretation of AI for their business, not commoditized version. So I think they'll be okay. But I think the SaaS stench on these names has to blow over.
The SaaS stench.
Okay,
right.
Let's get started. Let's start off with
Apple.
Apple.
Okay. So if it's in software or if it's one of those sectors where AI could take it down, it's going to be a bad chart, right? If it's energy or around the picks and shovels for data center building, it's going to be a good chart. If it's not in either one of those, it's going to be neutral. So APP bearish. So this is one you want to watch the IGV to see general sentiment. It's at the lows. It's down, but you are not. What do we want to know here?
Well, it's down from 750. People are thinking this is one of the best growth stocks in the market. It has to be close to the bottom.
So it's at 381 is actually where I have my typical retracement. As a trader, here's the difference between trading and investing. One of them is that a trader's, if you're not trying to anticipate shit, nothing. So you look at this and I could have my level and I get an alert when something hits my level, but I'm not expecting or putting my money into a movement before the move actually happens or starts to happen. Investors, does not compute. So here you have to watch no trade unless it's over 402. And then you got $50, $60 to bounce into here. That's it. That's one trading area. If it's over 470, okay, we can talk a little bit more. But you're more at risk. Downside being 230. If what is this here? 230 might be a bit aggressive. Let's see. Point of control is 330.
Dude, if it falls below 300, for the growth they're putting up, that would be incredible. But then again, today might be a head
multiple, right? I don't know what the multiple is.
The multiple's still aggressive, but the street was normalizing a pretty aggressive multiple for almost 2 years before this SaaS stuff.
Yeah, the street is finicky. Or the market is fickle.
Yeah.
Again, if you like the company and you can look at this and be like, this is going to be best of breed 10 years from now, I don't mind nibbling here, but with a caveat hey, look, if we take a downturn, you probably get a bounce, right? But the bounce is still, again, we're in that counter trend kind of bounce. You don't even have your death cross yet. Give me a death cross and then let's stop. But like you could get a bounce, but because it's lost so much, it's going to be a counter trend bounce. And when you do take a trade like that, it's like you got to size a little bit lighter and you got to take profits a little bit faster because it could turn on you real quick.
Okay, hymns.
All right, I looked at this since they reported. What are you looking at? We're looking at a giant nothing burger. Did you sell any puts or calls on this thing? Because
I did not. I mean, yeah, I mean, it went down, but then it kind of recovered, and now it's flat.
I mean, I'm looking at this little thing on my chart. What are we doing? I can't even. Like, it's gone so low.
Yeah,
It's gone so epically low. I don't even need a timer here. I'm gonna change this timer. We don't need 2 minutes. We can do
like 1:30 if you want.
Yeah, a minute and a half.
70 to 14. This thing.
Yeah. So at this point, I think I said this last week. If you like this, go ahead and take your 10 grand and buy some. And that's just my random number. You know, throw it in a drawer and check back in 10 years to see if the company is still alive. That I can't say that because you got Roe and you got a bunch of others. I don't know that this is the one that makes it. So I don't know that it actually recovers. But if you like it, you're down 90%, man. Like, what can it get worse? I mean, I guess you could go down. This is
100%.
Yeah, you could go down. It could go down 85% from the highs, which would actually almost be in effectively another 50% from here. But yeah, it's what are they gonna like punish it more than it already is? I guess, but it's already pretty punished.
Nebius.
So neutral. 108 remains resistance. We're not through that. So the good news is it's holding, but it's still very much in that box. So let me just redo some quick measurements here.
Let me also, again, guys, Jason's Twitter, put in the chat. If you have questions, want to follow him there, you can.
Yeah, honestly, the best way to get a hold of me is the Discord. So the Discord is free, by the way. You can hop in and then you can @ me in the chat. And if you really want to, there's no cost to doing that. And there's a bunch of free stuff too. But yeah, you got a little session gap that had been filled, 108. I don't want to see this be a lower high, but I don't think there's a reason to sell this here. I like it as a speculative position, not like anything massive.
Yeah, I think all the neo clouds are basically stuck until NVIDIA's earnings. And even if NVIDIA pumps, like they're still kind of just range bound.
But so like of the neo clouds, I do own a little bit of Nebius, but I only own Nebius explicitly. And for me, not that I know the management at all, it's mostly because it's not overly US exposed. I have a lot of stuff that's exposure to the US data center build out. I don't have much that's like, oh, we're explicitly not US data center build out. So if I get hit on some US data center build out stuff, it's not necessarily going to hit Nebius as bad. Does that make sense? So from that perspective, it's slight little diversification, but it is still duplicated risk but less.
Celsius.
I own it. I told them I would. They make me look at this thing. I didn't want to look at it. Because if I tried to look, I'm telling you, this is why I didn't look at it. If I had looked at it at 42, I might have sold it, but I didn't. Yeah, I'm happy, dude. I'm a happy camper. Unfortunately, I do have a Red Bull here because that's what was in the fridge in the front house. But and I ran out of liquid deaths. And I'm not. I guess I can buy some Celsius. Is Celsius still a good drink?
Dude, I had it the other day and I thought it was disgusting, but it doesn't matter what
you have to get the right one.
I've tried so many flavors. They all just taste like carbonated juice. Like it doesn't even
I
taste
kind of
like
just want carbonated juice, but without the sugar. And here I am drinking a freaking Red Bull.
No, but even the Red Bull without the zero sugar Red Bull still feels like it gives you energy.
Okay, what is the best drink intraday that's like got some flavor to it and not absolutely horrible for you?
Water.
Doesn't have any flavor.
If we weigh not horrible for you, it's definitely water. But
Is there one? Yerba mate? Is that bad? I don't know. So yeah, so we're consolidating here. This is it's in a better sector. It's consumer staples sector, believe it or not. But it's still kind of gross. So I like this here. We got earnings Thursday. I mean, all right, that's not a bad option.
Dude, I've never drank.
If I drank,
I've never drank in the middle of the day, like between the market open, market close. I don't think I've ever had a sip of alcohol. I feel like my entire day yeah, I can't drink before the market close. Like that would just be weird,
dude. What is up with your childhood? I don't understand. Don't you know like the cure for a hangover is drinking? Those are the basic things. No.
More drinking to cure a hangover. That's incredible.
What about carbonated water? Those
oh, I have those. Yeah, those are decent.
What's the ones they sell at Costco? I could get the yellow ones. I feel like Topo Chico something.
Yeah, there's so many flavors of them. Can we do Nubank? They have earnings tomorrow.
Ooh,
there's a couple actually that have earnings tomorrow.
That's nice. You know, no, so I have some global diversification stuff. I think maybe a little bit more at this moment sounds good. This is not bad. It's not great, but I like Japan.
They had a really good quarter last time.
What happened here? Is this just technical breakdown?
I think that's technical. I don't think they had.
I mean, it is technical, but so uptrend is gone. But I think whenever a breakdown, this would just be a retest to short into, unfortunately, and that's how that typically works. But earnings can supersede any technical. So like my technical read on here doesn't matter that much. I will say if it breaks down, you're probably looking at this 14 retest in here, which is where it's heading anyways, without earnings. And I think a bigger dip, yeah, that's where it's heading anyways, as it stands. A big nasty dip is in the 12s, which is going to be your like primary support. But unless earnings just totally blows everybody out of the water, I don't see this going up right now. But if they do, it could. It's a bank though.
ONDS.
Banks have been not having fun. Le drones. I mean, anything like with this theme, I think is like, look, we're neutral, but there's still, I don't know how real ONDS is in terms of the actual.
From my understanding, they're legit, like legit.
For military contracts,
yes.
Is what I was thinking. For military contracts?
Yeah, they just got a recent one with Germany's police.
Oh, global. Okay. I mean, so there are higher global tensions right now than there were a month ago.
Yeah.
And so for that reason, there's the conflict cabinet that is like defense, commodities, oil, gold, which is, we see that goes on with the other themes in the market also. So so these are going to be at least neutral, which is what we saw in Rocket Lab, what we saw in ASTS. If there's like, not a need to spend massively there, then, then they might pull back, but it's mostly neutral here. It's very much the same as the rest. I think just from a basic perspective, yeah, you're right on $10. It's kind of like right on the money with the pullback being 830s. This is just like the rest where you want to see it hold that. And for an uptrend to really sustain, you need to be over 1150, which it's not. So that makes this neutral.
EOSE.
This one was getting crushed, and I think this one might have been a bigger liquidity grab. This is a wild one. Like if I took this from the inception lows to the highs, and I did this on my stream on yesterday, it didn't look great, but then you pull it back a little. Here's the box, the range that it was stuck in. This pullback is the 20-day, which is not a big deal to me, but it is 50% from like inception lows to most recent highs. Wild how that kind of lined up. So I think this lines you up for a retracement, for a counter trend bounce. Although we got, again, earnings tomorrow. So this is one where, like, if they do really good, it's energy. I don't know a whole lot about them. It's low market cap, high beta energy, 3.7 billion. Honestly, I could legit see this at like 15 post earnings, which is like the end of the week, but I could equally see it at 7. So it's kind of a wild card right now. So it's not, it's got a small bounce, but you have this fundamental thing happening on Thursday for earnings. And the range here is up to 1490 down to just under 8 on an earnings move from a chart perspective.
Reddit.
I knew you were going to say that one. I saw that pop up in chat. Ooh, there she blows. Dude, it's not looking pretty. But that's not Reddit.
It's a different type of
Harvest, Reddit, advanced high income. Oh, this is a Reddit dividend stock. Oh, maybe you could. No, we're not doing those.
It looks just as bad as this.
We don't do those. We don't do those. And it did look just as bad. I don't. Yikes, Aroni. So like, this is where it just doesn't look good. It's beyond where we thought it would be. This is resistance. Like if I pull this over here, that's your resistance. I could probably make this red for resistance here. And then if I take from these lows, I mean, last time was a bad break. It's still a bad break. The thing about this stuff, this is an older chart. I'm on a different template right now, so you can't really see a whole lot. I mean, 120. You don't really want to see this losing 120s because we know what happens. But this one, it's so squeezy. So like it's coiling right now. What I would say about Reddit is that it's stopped going down. It looks ugly as all hell. But this like ultra steep downtrend is not in this super steep trend anymore. This is the squeeziest stock I've ever seen, like I've seen a long time. Like it's possible for this thing to go sideways for a while and then boom, out of nowhere. But to that end, I want to see sideways action. Like if it's not going to go down any lower, that's fine. 155 is the level at which an upside squeeze is really on the table. But you'd have to be patient with this one because it does it when it wants to do it. It's just the personality of the stock. You're not going to see it until it's like too late and already like violently enforced on this guy because it happens like in a single session. So when it goes, I think if it goes, you could probably hop in. But until then, not seeing it. I don't want to anticipate it till it's like really going strong.
I think that's fair, especially because it's caught up in the SaaS sell-off.
It's so caught up in the SaaS sell-off. I hate the SaaS sell-off right now. It's so bad.
Grab.
Is this caught up in the SaaS sell-off?
Well, this got caught up in the DoorDash Uber sell-off yesterday from the Citrini article.
I mean, what was the argument that Uber is going to get taken out by AI? How's that?
The argument is the marketplace moat that DoorDash and Uber have, or a Grab, for example, or a C Limited. will be replicated by multiple thousands of people making their own agents. And that will commoditize the transaction fee that these companies charge, which is
You mean to search for the best price service?
Yes. And they will independently go to Panda Express and then make the order.
That's not happening.
Well, a lot of people have pushed back against it, but
no. Have you ever tried to do that?
I've never.
I've tried to do that.
You tried to vibe code your own DoorDash?
Yeah, dude. Like it has horrible GPS.
I would imagine. Like, there's a reason DoorDash is DoorDash, right? Like,
it's absolutely rancid. Like, it does not know where you are at any given time.
Well, the biggest question also is, how do you get the drivers? And they were like, oh, well, the drivers will just like know how to connect with the agents. I'm like, well, there's a reason drivers go through Uber and DoorDash. And
yeah, dude, it tells me like, oh, this is the best place to go for what you're looking for right now. And it's like in another state. And I'm like, what are you doing? And I know this because I have tried to do this.
Yeah, you need the delivery network. So I think that's why Grab sold off yesterday with the other names.
Yeah. Again, I think it's dumb, but the market is dumb sometimes. I think it's viable, but only if you're willing to endure more pain and be in it for the long haul. So with the ability and plan to buy it deeper, this again, so very much like everything else, this is what I'm talking about. So I'm over time on Grab, but here are the lows, which is about $4. The lows are holding. So this is support. Unfortunately, this is resistance at 440. So resistance is holding just as much as support is holding. It's in a holding pattern. The market is on edge, right? But until there's a reason to crack one way or the other, it's just not going anywhere. And honestly, trying to fight it, to break out one way or the other and try to press it, whether depending on what vehicle you're trying to use, like if you're trying to use options, is going to be painful. This setup is for a lot of trappy kind of price action where it looks like it's going to go up one day and then it just does this. And then it looks like, and then you sell the lows because it looks like it's going down and then it does that on you. Literally right there is what this looks like.
Yeah. No, I agree. And like they're fighting the trend here is difficult because you just don't know if you're fighting the trend up or like shorting it is difficult and then going long is difficult.
Yeah, because it doesn't move a lot unless you're doing, well, you can't because you own the stock. So Vladdy gave me access to short stocks today.
Oh,
I got a noti and I was like, maybe we could play.
On hood.
Yeah.
Can we do Lemonade? This one got it wrecked.
Oh, so we're gonna short this one? So
I think the short's over now on this.
So my IBM thesis was like, okay, in my mind, this stock IBM should have been taken down with Adobe and CRM a long time ago because of the thesis. What is Lemonade's like strategy here? What's their, and you know it because you did a bunch of podcasting on it, but what's the sauce?
Dude, literally the reason I've never bought it is because the sauce is AI.
Okay.
Like, every time I talk to a Lemonade bull, it's like, well, it's AI fueled insurance.
So this will become a short target. Track, follow.
Why?
It's right in the blast zone. It's literally in the blast zone. It's way up there. It's coming off a $12 base. So it becomes like, well, it's already happening. They're already doing it. So whether or not Lemonade is in the headlines today or not doesn't matter. It probably will be if it's in the blast zone based on what you just said. And what you just said puts it definitively center stage of one of those companies that the market could decide that they no longer like. It's at risk, even though it's insurance. Whether or not you want to short it, go long, doesn't matter. But what the storyline in the market is that stocks like this are actually at risk. And if you do want to go out and short something, you want to find one that hasn't taken the massive beating of Adobe or CRM just yet, because that's where your best trades are going to be. Here now, you're at support.
But Lemonade's already taken a beating, so why would it be?
Not really, dude. I mean, it's okay. So it's here. It's on support. This is a $12 stock. Most people own Lemonade at like $12-15. If you own Lemonade higher, let me know. But
dude, I think most people own it higher than 12. I mean,
really,
when we did the deep dive, I think it was at $30. Like,
okay, that's lower than this. So then I would actually say right here, this is going to be your breakdown point. So like if it goes any lower, this $30 is the real. Okay, it's 15. Dude, most people own this at 15. Most people own this at 15. That's what
you're
the
seeing that
chart
because of the volume, right?
Yeah.
Yeah.
So it's a massive run up in a short period of time. If you lose this 45, it's probably coming down to at least 30, which means that this could be a short the pop type of situation. So where's the pop to short? That's in 59s. So if you get a $59 to $35 trade, something like that. So meaning if you look at this and you kind of say, okay, here's resistance in the past. If I can retest resistance, I can identify here's some prior support. If I can retest that over here like this, where it makes people think that you're going to go over the 200-day SMA, that's actually an ideal. Anything in this area is more of an ideal short to go down to the 30s, 35. That's a trade. So I think this sets up for a trade higher, but that would be my logic, and that would be my trade thesis, which is not a big one. So it's like, you know, it's what it is, but that is the kind of thing that I think we're seeing setups for. So you're at support here, you go back to retest the highs. I don't know. This isn't a downtrend. It's coming down, and it's just finding a decent spot to get in and then get off, because it's already coming down is what I'm saying. So you're not really fighting the trend. You'd be trading with the trend. If you see it close to 62s and you take a short down to 35s, literally just like that.
Duolingo.
No prejudice on the stock or anything like that. Sorry, Spencer. I know you talk about this all the time. What are we doing, Duolingo, man? I'm at my downside targets, man.
I feel like it's going to 50. I feel like it'll be down 50% on Thursday.
Yeah.
Now, theoretically, any good news should be enough to get this to pump, but imagine.
I mean, this is patient zero, is it not?
Yeah.
It actually is. You managed to go long patient zero for the entire 2026 bear thesis. That is skill, brother. You should be proud.
Thankfully, it was in a pretend ETF.
Yeah, they just pretend.
I mean, like, again, this was the poster child for AI being commoditized.
It is patient zero. So, like, I think that if you're going to do anything with Duolingo, it would just be to dissect how this is played out. Because I do think it's played out. And I don't think there's a reason to go out and front run it. But this is patient zero of the thesis that we're talking about. So, like, you know, do you want to go out and short patient zero? It's already gone, right? Like, what do we do? What are we talking about here? Can it go lower? Yeah, but like everybody's already exited stage left. There's not really a lot of momentum left in this to the downside. And I don't really see a reason to squeeze it upside until post earnings. But, you know, it's probably going to see 70s. How much is it right now? It's 109. So like, it's probably going to be low 60s. I have this area 72. Which is not much in comparison, but even at that, I would want to see it bounce first, but I'm not seeing any bounces. It's so bad.
Dude, if they miss on some of their metrics tomorrow, could you imagine?
I could.
They already have such a bad narrative. Like,
you know, there's a stock that I watched that has gone up, I think. Yeah. For the fat people, this one bounced. It's diabetes medicine. They ain't gonna get taken out by AI. That's definitely not gonna get taken out by AI. Dexcom was the other one. No, not doing it. There are some stocks I like. I don't own this one. I'm going off kilter again, but I like stocks for my long-term port that have a win-win on the AI data center build out in terms of, is it a pick and shovel type play, but also have an additional underlying kind of turnaround story. So Saya Technologies, it's a shipping company coming from the enterprise. We nearly exclusively use this company to ship all of the all of the enterprise gear. When we're building a data center, it was heavy Saya. You know, whether or not they're a great shipping company is besides the point. But they probably have like 90% of all this data center build that we're building, everything that's being spent. It doesn't just magically teleport to its destination. It has to be shipped. And so you get a little exposure to the data center build play, which is weird because it's a shipping company, but also inside the transportation index, we're having like a bearish to bullish resurgence and turnaround stories. We're coming out of kind of like a bear market in the transportation index. Saya is uniquely positioned to capture both that turnaround because they got a bunch of products at a discount to be able to expand their operations at a discount by buying some other, you know, old companies' gear at a massive discount, and they benefit from the data center build out. So this is one I would put on your radar if you don't know about it. It is turning around. It's got some pretty heavy upside, but the thesis that I've been talking about and like what I've been saying when I'm picking stocks, I'm thinking about that kind of stuff. We like GLW, not just because it's a data center build play, but also because it's an onshoring play. And if tariffs come down, who are they selling to? They're selling to Apple, that stupid Gorilla Glass. It's good for Corning in both scenarios, whether we have good tariffs or bad tariffs, they're going to win in both scenarios. So this is kind of one of those that's interesting also. And Saya is like 100%. These are the guys that capture all the shipping for data center stuff. Say Oscar.
Yeah. Healthcare is also kind of stuck though.
So my healthcare stock is the one that's like, all right, this is speculative small cap. So if you want to put it, I would say this is the spot again. This has been the spot. So if we're in a trending market, if we're in a sideways market, what did I say before? I said expect support to hold and resistance to hold. So in this situation, resistance keeps getting lower, but support is staying the same. This is support. Expect a bounce, but expect the bounce to be lower at 14, just under 15. And if you like it long time, then you like it long time. Grab your 10K and throw it in a drawer. Check back in 3 years.
CoreWeave.
Is this technically a NeoCloud?
Yes.
Oh, it's Jensen's favorite NeoCloud.
It's Jensen's favorite NeoCloud, correct.
So earnings on Thursday. Also, Jensen's BFF. So I think you could take it for a headline play that Jensen mentions CoreWeave on their call. And one mention is going to put this guy in the hundreds again. So that would be cool. I might just play a prediction market. Have you checked out the prediction markets yet for the mentions on the NVIDIA call?
Really? They have those? No.
Oh yeah, dude. I feel like that's an easier layup to play than trying to trade options directionally on stuff like this. But I would bet that they mention CoreWeave because he loves them. Whether or not it's good long term, I would call Jose. But this here is holding support, and support here is so support holds, we assume, but also resistance. So here's a resistance. The good thing about CoreWeave is that the support is getting higher here. Resistance is staying the same, but it's not breaking. I think I'm looking at 102s, just under 100 or just about 100 here.
By the way, we got some breaking news. The court has dismissed the lawsuit that Elon alleged against OpenAI.
Oh, is that going to move the market? No.
XAI can file another one, but the current one they've put out, OpenAI's motion to dismiss is granted with leave to amend.
How infuriating for Elon. He's going to go on a rampage, dude, and his rampage is going to take down the stock.
He's gonna start tweeting some crazy
I
shit.
feel it coming, dude. I feel it coming.
TSM.
So, yeah, like I think this is, if you're gonna pick a semi, like it's pretty clear. I'd almost say that TSM is a better case than NVIDIA, because they're gonna capture everybody, right? But you know, it's clean. It's instant uptrend. There's no reason for me to think that it's not going, aside from like maybe take a breather for a bit. But yeah, this channel's firmly intact. Again, TSM sells to the AI revolution, right? Like TSM is like one of the primary beneficiaries and drivers of what we're talking about. And what's not in question is the spend on the data center build out. So for those reasons, there's not really, and TSM manufactures for all the companies. So TSM is going to be the primary beneficiary, not NVIDIA, not AMD, not Intel from that perspective, because it's a catch-all. The market doesn't have to pick the winner at the end of the day.
Yeah, and TSM is the one that, I mean, I feel like most people haven't been super long, but it is the prerequisite to NVIDIA getting these chips.
Yeah.
So them increasing CapEx, I think, is also telling. It's basically a $2 trillion company here as well, 1.99 trillion now. What was your high target and low target for CoreWeave again?
102 near term, and then 85s is support. So can I get a time frame to what you're talking about? Because what I'm talking about is like 48 hours.
I would say 6 months would be the.
Oh, good God. Okay, so that's very different. Okay, so 125, 6 months upside. Yeah. And if it's below 85, it goes in the gutter, in the garbage. Because there's no buy below that here.
Okay. Amcor. Good earnings, but this one's been stuck as well.
That's not bad. So like, there's more to Amcor's story than just NVIDIA, right? I mean, how susceptible is Amcor to AI taking them out right now?
I mean, data center demand would have to fall off a cliff for that.
Well, okay. So that is so that storyline is something that hasn't come out yet. That is kind of looming, which is like, okay, the question of, do these customers survive the spend and do they make money soon enough? But when you play that tape forward one more level, the question becomes, what if they don't survive and some companies start really doing bad? If that happens, then your Corning, then your Amcor, and everything that I was just talking about actually does not do well. And so in that instance, that's what's at risk here. But we're pretty far away from that thesis playing out because we're still in the just questioning, not like it's really reality. But because of that, that's why I think these are actually somewhat strong. Last time I said this would hang around 45. I think that stays. But the dips here are below 35 if you see it.
Okay.
You want an upside? Sorry.
Yeah, for sure. It's around 60, I imagine.
You're still on the 6 months free?
Yeah.
Okay. So let me just get Confluence here. 60.
Okay.
60 to 65s.
That's where most of the price targets are on the street as well.
Yeah, that's your upside.
Broadcom, how are you feeling about this? They went down today off this Meta deal.
I feel like they're expensive. And they're not as they're not like a TSM, right? What's the market cap here? Same as TSM.
I think it's 1.7. Let me see.
Yeah, 1.5. What's the PE comparatively?
68. It's a,
Well,
it's a little
well,
higher, but they've always been expensive.
yeah, it's ugly, dude. It's not holding. Momentum is in. This is a setup that stocks do right before they roll over. This is what this whole thing with the SMAs, with the resistance, what was support now turning into resistance, literally right here. This is a bullish to bearish reversal in action. But you don't have earnings till March. So I don't like this. I'll just go back to screenshot that in your mind. What you're looking at is literally this moment right here on Netflix. So this setup, you don't have your breakdown, but it's like your heavy. You have this big kind of, what do you want to call this? Like half circle that's happening, and you have support that's drawn, and you're literally like testing the bottom of that support, and you've broken down slightly. Here's your price support. You have that big overreaching kind of half circle, and you pop up. You look like you're getting at resistance, but it maybe get over, but it ends up being support, or sorry, getting back over support, but it ends up being resistance right at an inflection point of a 200-day SMA, downward sloping 50, downward sloping 20, right before the 200 starts to slope down, because you have this overarching kind of like hood situation where that's at risk from a technical perspective. Fundamentally, don't ask me, right? That's not my box in this show, but technically, that's what this looks like. So you do not want to see this below 315 anymore. How's that? You can watch it, but it's very risky.
They also explicitly said we're not getting any OpenAI revenue this year.
Okay, so let's do it this way. So if we get a big gross pullback, what do we want to look for? Sub 275.
Yeah.
Down to this 245 retest in here.
I wonder though
if you do get a breakdown, this is your short target with targets here and here, and you would do that post earnings like that.
I wonder what that would do to NVIDIA if we see Broadcom at those levels.
135. I already said it a long time ago, right?
That would be ugly.
But I don't think NVIDIA is going anywhere right now.
Yeah. ServiceNow, are you at all interested in this one?
Is it 70?
It is not 70.
It's gonna be 70. Call me then.
Really? You think it's going to 70?
Dude, how many times have you seen that happen? Okay, yeah, let's do it though. So, okay, here's the lows, the recent lows, here's the highs. Okay, so when you lose 128 here, you're no longer in a retracement territory. That's like, this is like Reddit. Literally, Reddit is right here. And so when I look at something like this moment on this chart, that's exactly what Reddit's doing, literally right now. When you lose that type of like good retracement spot, it's not a retracement anymore. It's a reversal. There's a difference between a retracement and a reversal. This is already reversed. It's going to be down tomorrow, probably because of workday. And it's just the sentiment. So you want me to pick it out for you? It's going to be, how granular do you want this?
As granular as you can get.
I'll give you a rough 73.50.
But see, I feel like IGV is not putting in a bottom right now if that's going to 73. Right?
I don't feel like it is either. I'm pretty sure I said that.
Oh, you did?
At the top. But I watch for IGV. Like if IGV starts turning around, you know what's also going to be turning around? ServiceNow. But remember, this is a trading show. And I also started early on this show where I mentioned the difference between a trader and an investor. One of the big ones is that traders your job is not to anticipate. Your job is to react. Traders react 1,000 times faster than an investor. But that's why investors, they anticipate. So if you're shifting the mode from investing to trading, it's core, and it's foundational to trading. Like you don't anticipate, you watch, and then you react when things get to your levels.
Oracle.
I mean, I'm short, baby.
You're short.
I've been short. I'm short every pop on this thing. This is this is the first IBM to me. Honestly, this is one where I'm like, I don't know. I mean, I've been short for a long time, dude. I've made a lot of money on a short here, so it's not like every time I get a little pop, I kind of like roll, which is, for options terms, it's like take profit on the downside, and when you go back up here, then you add to your shorts. Actually, I told Steve when it was over here, he asked me about Oracle on that one show. Do you remember what I said? Anybody? I was like, if you want to learn how to trade, Oracle's probably a good candidate. It's at 160 something to take it short back down to 140. I mean, here we are. But I don't see them stepping in front of Oracle other than maybe short covering. So any bounce here would just be short covering. We don't have earnings here till March something. I don't think this holds, dude. I have 115s for my next stop. Ish. Maybe it could be 120s. I have at least in the 130s, but we'll see.
Okay, before we continue, SoFi is making a move. There is a reason why, and I'm about to share on the screen. This guy, I guess when he gets bullish, he can definitely pump some stocks.
Did he do it?
And change off about $10 from when I said hold off, dragged down by the broader AI displacement sell-off. We've seen some nasty declines in health management companies because of the stock brokerage too, and former fintech darlings. Somehow that's come to include SoFi, which is now down about 30% year to date. That call from Don in Florida last night, I gotta tell you, I thought it was worth coming to this one with fresh eyes, because at the end of the day, SoFi is a bank. And banks are not under threat from artificial intelligence. They're consumers of AI, not the prey of it. Think of it like that all times. Ask which they are. It just seems that Wall Street hasn't gotten that memo. When SoFi reported at the end of January, the stock just got clobbered. And it's been falling ever since. But you know what? The actual numbers were excellent. 37% revenue growth, 160% earnings growth, both higher than expected. SoFi's overall membership count grew by 35% year over year. 35%. To 13.7 million people. Their net interest income jumped 31%. Fee-based revenue was up 53%. I mean, this is a great business. It is practically printing money. Now, SoFi's guidance for the current quarter came in a little light on every single line. But look, these guys have a long history of practicing UPOD, which is under, promise, and over deliver. The company has beaten revenue and EBITDA expectations in each of the last 18 quarters. It's reported since coming public in 2021, and it's beaten the earnings estimates for the last 9 quarters in a row. That's not shabby. More importantly, when you look at SoFi's full-year forecast, these numbers are nothing more than sensational. For full year 2026, SoFi expects total member growth of at least 30%, and with revenue growth coming in at roughly the same level. Adjusted EBITDA, net income, and earnings per share, are expected to grow by 52%, 71%, and 54% respectively as gross margins expand. Now, all of those numbers were much better than Wall Street was expecting when SoFi issued that forecast about 3.5 weeks ago. I mean, that's so. In other words, they issued something in 3.5 weeks, and then they just clobber that. On top of that, SoFi issued what it called medium-term guidance, saying that it expects adjusted net revenue to rise at a compound annual growth rate of at least 30% for the next 3 years, meaning that through 2028. I love that kind of thing. In that time frame, SoFi also expects its earnings per share to rise at a 38 to 42% compound annual growth rate. Guys, these are astonishing. There's absolutely nothing hurting this business right now, which makes it kind of crazy that the stock pulled back from 32 to 18 in the past few months. Again, this is not some throwaway financial technology company that can easily be replaced by AI. It's a fast-growing bank with digital traffic. So I've been recommending the stock all the way back since it was $5. And what caught my attention, why I like it so much, frankly, is its CEO. It's Anthony Noto. I've known him for almost 30 years. When he was a banker who helped bring the street.com.
If you didn't think Cramer can pump stocks, he can pump stocks. Literally, it's moving because of the mad money. Look at that. It's up 3%.
Josh Brown does this too, your boy. He does this all the time to my stocks. He likes the same stocks as me a lot of time, and he mentioned this crap, and I'm like, really, dude? I hate it.
I mean,
So I get like they're all in the chat. They're like, make it stop, make it stop. They
it's
know.
a pretty big move, though. I mean,
It's a big move, but they know.
So yeah, for those wondering, it's Cramer.
Did you see Tanner's interview? What he did?
Yeah, it was great. It was
Yeah.
awesome.
I think I didn't know, like, really, like, dude, that Noto is like an analyst, and so like he's a I almost want to say he's like a trader, but he's more like a Steve type trader.
Yeah.
But yeah, it did sound like he's gonna plan on buying later, anyways. So
Oh yeah, March 1st, he can make an.
he
open.
knew it. He knew the date, right? So you're like, whoa, all right. But I don't know what they're doing. They probably have something planned, but that's more like investing, not trading. Trading, I can see this up to, we literally just did this. I could see it up to 2067, but like, I don't know that it holds either. So, I mean, it's nice, but this is still counter trend. Nobody likes to see Cramer pumping their stock unless it holds, but we're still TBD. Damn it.
Micron.
Moo, the cow.
Are you short in this name?
No. So no, I was. I might be again if it fails, but I mean, it's strong, dude. Like it's strong. It's just not actually. No, let me see. I did cover this, and we are like it would have to be back under 410 again, and then I would think about shorting, and it would just be like because this is a lower high. But I mean, the current thesis, like if Micron's going down, then there's a lot of other stocks that I have that are probably going down too. It would be losing this, and this would be what we would call like a bear flag if I see that, which is what I thought might be happening literally right here, and it did not. So that's still on the table, but I have to get what we call a retrigger because again, I'm not anticipating, I'm just reacting. So this was a reactional. The trigger to short would be the same one that it was before, which is 410.50. So here was where that short initiated, and it would be the same thing if it happens again over here as a reactionary move. But I'm not seeing it right now. Right now, this is still holding, and if this gets over, I think the upside would be reclaiming the trend, and that would put it into the fives, which is what I said before also, and would continue to say here. But that would just be reclaiming the channel, the trend. It's not yet though. So that's my concern, is that you can get this if it needs to actually be above really like 450s. And then I think you can have a big move if it can actually reclaim the trend. But otherwise, I would be a little cautious of a potential rejection when it does retest the trend. I'll zoom in on this a little bit. But this is a spot to watch. It's not a spot to act on right now. Not yet.
There are so many conflicting narratives around memory.
This is a very complex, storied market right now.
Yes.
There's so many. It's not easy. Like there's so many narratives in general in the market between Iran and the AI anxiety to the debasement trade to new Fed chair to like, dude, only 2 rate cuts this year, or are we going to get something else? Like it's a complex environment out there that's not super easy. And in the midst of it, we can hardly keep a trend for more than a couple days right now. So you either are stuck waiting for the narrative to change, or you get a thematic trade that goes in your favor and you ride it.
Yeah. It's just there's a lot of narratives, as you mentioned, and one of those narratives is fintech, PayPal. What do you think about this one? Is there worth doing any TA just given the acquisition rumors?
No, there's a way to trade acquisitions though, right? Do you know what they would sell for or what fair value is?
Most people are saying around $60. I don't know.
Okay. So go out, sell some Leap $60 calls and puts. There's your trade.
Yeah.
That's how you trade those.
Yeah, because then once it gets there, that's it. You're done.
You're done.
Yeah.
And you don't really want to own the stock anyways because it's going to disappear.
I mean, I feel like an
You
acquisition
make a lot of money doing that, dude. Let me see. It's
Well,
like
you would have to buy the stock though.
no, you don't.
I mean, what you're gonna do naked calls?
You could do a spread if you want. It goes up to 90. So okay, so sell $60 call, buy $90 call. There's a $30 call credit spread. Sell $60 put. What's the lows here? Buy. I went 30 wide. Go buy a $30 put. I get $20 credit for a $30 wide spread. That's good. That's good risk reward.
It's not bad, but
That's not
buyout
bad.
has to
That's
happen
good.
though.
Doesn't matter. I mean, you just sit on it and stew. But you need $20 credit. You don't want $15 credit. So that's there when you go that far. Those are that's 2028. You see, I don't need 2028. $60 put. Let's go $20 wide. $40 put, $60 call, $80 call. $15 for $20 wide. If I can do an iron condor, it's $20 wide, collect $15 for it. I'm risking 1 to make 3. That's a very good risk reward. And I just sit and stew and I don't check this.
Yeah. Adobe. Do you think this is a SaaS name that's exciting or not?
Mm.
Or is it the least on your totem pole of SaaS names?
It's been like taken off the list. Like, I should call my buddy. I have a buddy that went to work for Adobe. I wonder if he's still there.
You should ask your buddy what the hell is going on. Like, I wonder
You
if
wanna call him?
No, probably you shouldn't call him live, but I wonder if the employees are even bullish on their equity.
Probably not. That would be really not cool.
You're like, yeah, can you tell all thousands of us if you like it or not? No, but I wonder, like, do they think this stock turn? Because a lot of tech people get compensated in stock.
All tech people get like 50% of their pay in stock. But it's got vesting. So 240s. It's there, dude. It's there. So this is one where it's like it's at my level. It's actually at it. Like I had this marked out many moons ago. He's literally on it. But here's earnings. Look, this CRM. If we get a bounce in IGV, I'm diving directly into the deep end. I will tell you that, right? Like I'm diving directly into the deep end. If we get it, Adobe would be, although I'm not looking at it now because I need to see IGV turn around. I would need to see this would be post CRM. They have earnings coming March. I would not want to be in the way of that, but for a couple days of a funsy ride, I would definitely play. But that's all it would be. And I would play to like 285s.
Okay. UUU, Energy Fuels. Any thoughts on some of the newer stuff?
This is slightly in the energy trade phase, like the energy area. I need to pull up I posted something earlier in my Discord for a long-term port like update. But I mean it's for sure energy. The thing about this one is that it's more like speculative because it is uranium, but I like it. I don't love it. I think it's more of it has a place from a speculative perspective. I like it. I like it here. You got earnings coming. There are other uranium plays. It's not like Oklo. God, I haven't looked at Oklo lately. Have you? I'm scared.
62 or something.
62. See, dude, why weren't we just like really pressing the downside on Oklo?
Dude, I ranted about it at 150 after it fell from 190 for like 20 minutes one day.
Yeah.
And I obviously should have bought puts because it was so obvious that it was not holding up.
Yeah, I remember.
And then again, the markets were at all-time highs. So it's like, what actually would have supported a short thesis, to be honest. But I didn't do it. It was so obvious, that piece of junk.
I shorted it a bunch of times, dude. But I didn't come back because I kept thinking like, you short a bunch of times. You get a little worried that you're going to get your hand. Dude, what is happening to something just happened where, hold on. I can turn my stuff off and on.
While you're doing that, real quick, here's the Anthropic CEO. Just got a clip from him about why he doesn't want the government to use his stuff.
Why I'm worried about the autonomous drone swarm, right? So, the constitutional protections in our military structures depend on the idea that there are humans who would, we hope, disobey illegal orders. With fully autonomous weapons, we don't necessarily have those protections. But I actually think this whole idea of constitutional rights and liberty along many different dimensions, can be undermined by AI if we don't update these protections appropriately. So, think about the Fourth Amendment. It is not illegal to, put cameras around everywhere in public space and, record every conversation. It's a public space. You don't have a right to privacy in a public space. But today, the government couldn't record that all and make sense of it. Right. With AI, the ability to transcribe speech, to look through it, correlate it all, you could say, oh, there's this, this person is a member of the opposition. This person is expressing this view, and make a map of all 100 million. And so, are you going to make a mockery of the Fourth Amendment by the technology finding kind of technical ways around it? And so, again, if we had the time, and we should do this, we should try to do this, even if we don't have the time. Is there some way of reconceptualizing constitutional rights and liberties in the age of AI? Like, we don't need to write a new constitutional, but
but you have to do this very
fast.
Do
we expand the meaning of the Fourth Amendment? Do we expand the meaning of the First Amendment?
Again, Pentagon giving them a couple days to decide if they want to still use their stuff or not.
Nice. Oh, this is just like, I was trying to figure out what I was saying. So like, I did a quick update. I'm just going to show you a little bit, but I don't know how much I said here, but like, I literally, this energy thing, even it makes sense to me just to be long energy, even over like a neocloud, because like neoclouds are going to spend money on energy, but like, this is where I am on energy. And it's the materials. You'll have to screenshot this if you want to read it later. I'm not going to go into it. But for the rest of it, there are notable mentions. I think CCJ, right? So like that would be like a minor, right? For nuclear. I like the metals that are tied to the data center build out and the other themes. If you can find something on the periodic table for a debasement trade that is a metal that's used heavily in the data center build outs, you're going to get multiple themes playing at once. And I think that's where you're going to get better trades, or not even trades. These are more investments. This is actually the long-term update, that you can have sustained kind of movement. not just, oh, it's only got one theme going for it, because that puts me more at risk. This stuff, I don't really have to worry about that much. But is it there? No, my main ones, FCX, yeah, I've mentioned this more like a ton, right? I also have other things, but in here, I think you could really take a look at the lithium Albemarle. And then if you want notable mentions, CCJ, Rio Tinto, BHP, Nucor, we all know MP. But that's how I would take it.
So energy fuels here kind of fits in that bucket to you.
Absolutely, yeah. Because it's energy tied to data center, so it's going to have multiple. Is it real? Is it real? We don't know, right? And is it happening right now? No. FCX. I don't know what FCXP is, but you know what?
You know FCX.
I have a large position in FCX. I know it, but I don't know what the PE is, nor do I really care. I would just like, what is the PE on FCX here?
45, 50.
There you go. I mean, honestly, buying on, you know what the stat is if you base your investments on PE ratios, like your success rate? It's pretty low.
Yeah.
Long term. Like it's one of the worst things to decide whether to own a stock or not long term, just so you guys know. But this is a crazy bullish chart. You know, FCX was like $3 in at the COVID lows. I remember this. I bought it. Crazy. And then somewhere over here is like $3, dude. We're coming in on a massive move. But yeah, that could, it's going to, in this area, you know, I don't want to say anymore, but I love it.
Google.
Legoogs. Dude, she was so close. 295 was the bottom of the range. I did not think, I'm not going to, true story, I did not think Legoogs was going to hold. By golly, she held. She held. Now she's just in the box, but the high was pretty low so far. She kind of just same thing. She hits that 20 and 50 day SMA that are like tied together up here. 295 is it. That's the low end of the range. If we get weak, I think I said last time, it's in the 240s here for a pullback. This is a counter trend bounce. It's held so far. She's lost the trend. So she's not at risk for the broader theme, but if the market kind of like, here's what I would say is this would be more pullback in terms of the breakout that we were trading into this move that has completed, right? So this was the prior breakout here. So from here to there, you have an extension that's pretty much played out to 240. I remember doing this on, and I took mine down here, and then it proceeded to go absolutely wild. And it's now at like full extension. So upside targets have all hit. I think at best this goes sideways, but I do want to be on watch for a lower downside move. If it happens, she's not happening right now. 306 is important to hold. 295 is actually the bottom of the range. I think that's real. That's a retest over here. She already tested it once. She can test it twice. She can test it 3 times until it breaks in strength. I assume that it holds, and that's where we are. So I believe this is range bound. And if it's over 320, cool. We're actually going to see those 340s in the near term. But from a broader pullback perspective, probably this 240 where I stupidly sold it last becomes support.
And you wouldn't mind 250 as a dip buy?
I think it's the first dip buy. Any dip buys in the first half of this year, I keep saying this, I think you have to be prepared to buy lower if September ends up being a you know, what do you call that? Like a real bearish scenario. We're far away from that. So,
and again, you're of the mind in the macro that we pump like May, June, and then we dump until October. Is that kind of that's what you think happens?
Yeah.
Okay. It's similar to what other people are saying as well.
Is it? I have no idea what other people say, and I don't. The only person I listen to is honestly you. So
I listen to you.
Oh shit.
No, in general, I mean, it's the same thing with, Tom Lee's been saying, we're going to get a pump, but it will be followed by a pretty epic 20% drawdown. And then is when the real dip.
It's just seasonality. So I want to be very cautious because that is the tailwind, right? And so I'll pull a slide up again. The seasonal tailwind, goodness, here is as follows, right? 4-year presidential cycle. That is how markets move. It's on a 4-year cycle. We are in year 2, right? Midterm year. And we are here. You are here. This is March. Super normal. February, we already went over last week that it's like the second most worst month of the year. And it usually starts at the end of, we're going to get State of the Union in a couple hours. We're going to get NVIDIA. So we got to wait for that to really make any major decisions. But we could get this little kind of bounce, right in here, like a little, I mean, it's minuscule, but it is there. It's possible that we get this little blip on the radar, which oddly enough ends up being a lower high from a seasonal perspective, and then is what they sell into. So that's what I'm very cautious about. This is not new to anybody who's been around the block for a while. And if you haven't, here it is. This is the real seasonality. But what I've been saying is that in a presidential cycle, this is year 1, 2, right? The biggest dip to buy in the cycle is this year, September.
No,
this
right.
is the one
You're
to
right.
load up. And so and this is why it's weird, from an investing perspective, if I'm an investor, we think of what is investing. It means a minimum of 3 years. This is year 1, year 2, and you'd go back to the beginning of the cycle. That would be year 3. Anything in this area between now and then, if I have a 3-year time horizon, I don't care. Does that make sense? Which makes all of this stuff investable, not tradable. If I'm trying to buy something here and I think that it's going to pop in the next 3 to 4 months, you're smoking something crazy. Get out of here because you're doing it wrong, right? If you want to be buying, buy the dips and wish for it to go lower and buy more. Because if you have a 3-year time cycle, time horizon, you don't plan on selling this for the next 3 years. And if it drops another 50% from here, you plan to buy more. What I'm talking about is what you buy Netflix at 75. Then they decide to buy Warner Brothers. The street hates it. They take it down to 40. That's 50%. You buy Robinhood 75. Street hates it. They take it down to 40. That's 50%. Would I buy there again as an investor with at least a 3-year time horizon? Absolutely. But as a trader, I got to know there's downside coming. That's very possible. This is the dynamic. We're in this kind of catch-22. It's from an investing perspective, this is Amazon, this is Microsoft, not really Apple, not really Google, because they don't really give us any pullbacks right now. But this moment in this year of the election cycle, this midterm, it's the bad year, but you want to buy the fear, right? I want to buy the worst of the worst. The midterm year is the worst in a 4-year cycle. September of said midterm year is the worst. I want it, right? I want to be in there. So excuse me for being a little, whatever colored, but this is what I'm talking about. Someone's mentioned cybersecurity. I love this, right? Cybersecurity, Palo Alto, CrowdStrike. These are really good companies. I don't think they're going anywhere. Could I buy now with a 3-year time horizon? Yes, both of those. But Noah, but as a trader, should I be aware that there's potentially more downside to come? Yeah, you really should. And if you're buying as an investor, don't be scared. Don't blow your load. We don't mean full send, right? I mean, you mean nibble? nibble to me is like 1/4% or 1/4 of the position I planned on or less. Like, don't full send now, but like plan to DCA between now and the end of the year. You guys are going to be good, but this is the one that you want to buy. Not right now, but real soon.
Yeah, and again, the multiple compression has happened, but it is not stupid 2022 multiple compression yet.
No, and if you have no money left to buy the dip, I don't know what to tell you. Like, but as a trader, guys, you know, Amit and I are kind of, we have a lot of friends in this space. A lot of our friends will be done with the stream and they have other jobs. I do not have another job. This is what I do for a living. I manage with family funds. I manage my money. And I trade for a living. Amit is now like finance, media, doing his thing. But like, I don't have a W-2 to like, I'm not getting paid. Like if you're just an investor, you get a check every 2 weeks. You can just keep buying. My money is what I have. And that's what's in the market. Like, so I have to make it compound on itself over and over and over. So I have to be pretty careful about things like this. So that mindset's a little bit different too when you hear me talk. But anyways, the dip to buy is this year. Is it right here, right now? Maybe not.
And if it does, so here's the thing. I agree with everything you're saying. I do wonder though, that dip to buy that you're talking about, we would get some very ugly prices, which would be incredible opportunities. I wonder with Trump that needs to pump the midterms, with rate cuts coming, with earnings still being good, with CapEx, like I wonder if we have what it's necessary to match the historical midterm cycle of bottoming out around eating season. And you know, historically it might happen, but I wonder if it.
I love how you call it eating season now, but like also, you know, it's seasonality, it's real, but it's nuanced. It doesn't mean that this is how it's going to work, right? Like there's statistics, there's a statistical edge around it, but does it always replay itself exactly the same? No, right? So it might statistically be the end of February that ends up being bad, but actually, in fact, the end of May ends up being bad. That's a very real possibility. September's historically the bloodiest month of the year. But what was last September? I think it was green, and October. And October was really ugly.
Well, so, October still ended green though, even though it was ugly.
But that October is the one that had the big dip. So it's not an exact science. I'm not saying that. I'm not even trying to imply that. But what I am saying is that there is a headwind here that is this seasonality, but also no, as an investor, I want cash free because I'm buying the dip, but I'm not doing it heavy right here, right now.
Yeah.
And yeah, so like Jay, seasonality was out of whack last year. Just know what it is and know that, you know what? All the other jamokes or whatever out there are probably watching this exact thing. And it's kind of like the rest of technicals where it's like a self-fulfilling prophecy. If the smallest little, you know, article pops out and this was already on people's mind, that could be the spark that sets the fire. It doesn't need a whole lot because it's already there. So just know that that is what's there, but you want to have cash on the sidelines to actually do your full send later, right? Like you don't want to be liquidated at the highs before. You don't want to sell the high right before or sell the low because you were out of money and you needed your money to buy something else. You know, that's a different thing. And if you're doing it that way, you're probably doing it a little wrong. But just know, I'm excited for late Q3. I want this, right? And if this is good, this is gonna be good. Does it happen like that? No, don't trade off the calendar. But we watch the charts to give me the cues.
Philip says, wasn't 2025 the year a lot of the institutions were sitting on a lot of cash and the retailers were buying the dip? Could they be trying to manipulate the market to scare retail traders now?
I mean, we did the NAIM exposure index. So I think what we're talking about, so that's exactly what this is. That's the exposure index. So we're now at 82. I think last week we were 80. So they're slightly more exposed. I think typically, like I said, I think we bottom around 60. It's not about manipulation. Manipulation's kind of like not real. Like nobody's actually trying to manipulate you to do anything. That's not how this works. Like people are just trying to get paid through commissions and things like that. But nomenclature aside, what would have to happen to get a leg down in September, October? There's a lot of things that we do have actually. So here's this really weird thing. Right now, this is what happened last week, right? And here's the rhetoric. Is this okay that I do this? I'm way over time. We're not even on charts.
We'll do one more ticker to end out the day. And then
yeah, your astrologist is going into other areas outside of his box, right? But what's happening is that we just had a GDP. We come off a 4.4% GDP, right? Last GDP. Then this is last week. Like, what a crazy day. Streets expecting 3.5% GDP to come out for the advanced look. First of all, friends don't let friends make plans based on advanced GDP growth rates. Like it's not probably real. Also, before I go into this, I don't think that this 1.4 is legit because I'm pretty sure that this does not have all the data in there because the government was closed. But the market was expecting 3.5. And anything that comes in outside of expectations, especially this big of a gap, that's bearish, right? And so you get this, what we were thinking was going to be high growth with high inflation, which is fine. All of a sudden, the numbers in real time give us like a nasty, you're going to be 2% lower than what you thought. Like, hold the phone here. Or this is high unemployment. This is lower growth. And at the same time, PCE, which is inflation, month over month, comes in double what was expected from a month over month perspective and double what was prior. So you're telling me in this economic data that comes out last week that we not only have slowing growth, but also increasing inflation. Those two things, definition of stagflation. And in that instance, the market's like, oh crap, oh shit, what's happening? Is it real? I don't really think so. But that's what the market's thinking at that moment. And so that is, if this is true to George, this is it. It's that if the growth of the economy, GDP, does in fact slow and inflation is sticky, that's worst case. And then you get this data. By the way, we got the data. And then like, I don't know, 30 minutes later, SCOTUS strikes down the IEPA nuke. SCOTUS, then you're like, wait, it's bullish. But I don't know if it's really bullish. I do know that because of this, because the IEPA tariffs like coming off the table, the worst is behind us from a tariff perspective. So although, yeah, Section 232, whatever, there's still situations that can happen. None of it is as bad as what IEPA could have been. And so because of that, the worst is behind us from a tariff perspective. So tonight, pretty much no matter what he says about tariffs, I don't think can really move the market one way or the other. So that's the good news. But this is the lingering, this is what's going to scare the market. And it's literally right here. The combination of these two things, slowing growth plus higher inflation. There's only one trade in that market. And as that went through, look, we priced out, this is what I do on Monday. I literally did this on Monday. So you can come over. We went from 51% probability of a rate cut in June to nope, 50% basically no rate cut. So we moved one rate cut out. And then post Powell, we got a little squirrely over here. And that's literally what happened. But if we go into that other market, I'd say like quadrant or setup or cycle, I'm gonna try. There's just one trade, and it goes back to what I said a long time ago. If the market, whether or not it's true, the market believes that we go into a stagflationary environment, that is the worst case environment for stocks, but it's the best case scenario for gold and commodities, which is why I'm kind of like, if I do this energy thing, does this work here? If I do FCX, does this work here? Yes, yes, yes. Checks all the boxes. I'm covered across the board, no matter what the scenario is. Whether or not this is true doesn't matter. But in the near term as in like 3 to 6 months, does the market think incorrectly that can happen? And if they just think it, then they could start to price it in because it's such a forward-looking vehicle. There's your situation. Is it going to be real? It probably won't be real. We've seen it before, I think in 2022, where that was the 2 negative quarters of GDP, but they revised it away like, oh, sorry, it was wrong frames. But that sets up the dip buy.
I love it. I love it. Some good stuff.
I'm out of my box. Am I allowed to go?
No, you're good, dude. It's good macro stuff. Last stock, and then we'll end it, is Apple. What do you think about this one?
No exposure to AI. Oh, sorry. No exposure to AI. 260 was the prior all-time high right here. It breached it. We call this like a little liquidity grab. I would be cautiously optimistic on Apple. Right here, you're right into resistance. So you've actually rallied into resistance right now. So this is literally resistance. So if I assume that both support and resistance hold, the truth is that support is down here, 260. Resistance right now is 270. I would hold for a bit to see if it comes down and can create a higher level of support and not chase anything. So before this move in the market, support was around 265. What this means is if I can lock a higher low and really start to trend over 269 for a while, I would be patient here. Then I can see this happening. Not before then, because if I take it long right here, right now, I don't want to buy into resistance. And this is the hard part of this market. Like even today, day trading, I literally bought into resistance a couple times. I'm like, oh my God, what an idiot. All right. It's a hard thing to do, but from a swing trading perspective, I can have a little bit more patience here. So either this clears over 270s in 278 in strength, and we're just off to the races, all-time highs. And in that case, we are looking at 310 to 315. You're looking at 315, and that's all good. But I would like to see a higher low form here first, and then a little base get created. Otherwise, I just need to be careful because there's a pullback that if the market all of a sudden doesn't like it, then dips are in the 238 if this really fails. But right now, this is not in the blast zone. And I think this is more tariff related. But like I said, if we just got the SCOTUS ruling about the tariffs, I think that the worst is behind us from a tariff perspective. So that's more bullish than not on Apple here. And there's no AI risk.
I agree. I also think if CapEx starts to get so annoying to the street, the street's running back to Apple.
Yeah.
But this thing was at 259 last week, so it was down 5%, worst day in 7 months. So it is a volatile market.
It is. And so that's why it's like patient still. Trade location is what we say. Trade location matters a lot here because of that volatility.
Yeah.
Sometimes volatility just leads to price discovery, and volatile markets are what create opportunities for both traders and investors. As long as you're patient about it and don't try to chase things. And Tim Cook could be cooked. I don't know. I don't mind Tim Cook. Amit's not a fan, but
there's Jason's YouTube and his Twitter. I'll put it in the chat. Jason, is Charlie Brown? Are we doing it?
Oh,
is that?
I don't know. I'm actually now. Mama's down. So
wifey's down for it.
Wifey's down. I was just like, do you legit do CHARLEE or do you do Charlotte? It's a girl. It's a girl, by the way. So
I forgot. Yeah, you did text me that. Yeah. Okay. So breaking news for everybody. It is a girl. Yes.
Breaking news. It's a girl. I like
Charlie,
Charlie.
makes more sense, and then you can
It does.
her nickname can be Charlie.
I know.
But I still like Charlie as well.
I do too. So it's like, we'll see. We'll see.
It is a girl though, dude. It's so nice because you already have a boy. I really think it's important to have two different genders as siblings. Like,
Well,
like
you got that.
I
You
got
had
that, and I'm very lucky to have that. Like, it really does help with.
Really?
Yeah, because
Well,
as a younger brother, I think I became more empathetic because I had a sister. Like, there's just things you learn when you have a big sister.
I think that's important. So my son is going to be older, so he might be the protective brother.
And that would be
Very protective brother.
No, I like it, dude. 2 kids. This is the prime. You're getting into the prime of your life now.
Yeah, dude.
2 kids, like
2 kids. Yeah, we shall
they're
see.
gonna be trading by the time they're 5 years old, bro. These
Yeah.
kids are gonna be so rich. Like, it's gonna be.
Dude, my son, he got a little ukulele. He's very musically inclined. I don't know, like we have a lot of musicians in the family, but like way more musically inclined than me or anybody close. He's all about music. He's on the keyboard. He's playing chopsticks. The kid's like 2 years old, right? He's trying to do like the ukulele things, like trying to hold it and do his thing. Like, holy crap.
I wanted to be a musician so badly. If I see my kid show even an ounce of musical talent,
yeah, you just go. You buy I'm buying the real stuff.
Yup.
The toys, right? Like we're going.
They will have a piano right there, and
yes,
there you go.
But yeah, maybe he's not a stock trader. I don't know, but it's fun, dude. It's good stuff. I'm lucky to have this is home, like a back house place to do it here. And I'll just walk out this room and we're playing with the boy. But yeah, are we? Oh, so we have like another 2 hours before State of the Union, huh?
Yeah, so I'll be live again with Steve in a couple hours, and hopefully Trump doesn't say anything crazy that would hurt the stock market. But
yeah, hopefully he doesn't. So anyways, yeah, if you guys like what we do here, check us out. It's papergains.com. The server is free. If you have any questions, hop in and just ask me if you want to trade with us. If you book a call with our team just to say hey, what's this about? They're going to give you a ton of stuff for free. So at least just talk to one of our people to see. We don't charge a monthly fee for the server. I'm not trying to do that anymore. We're not trying to do the, here's my signals group or any of that kind of stuff. We're moving as far away from that as possible. Can you see my trades and our entire team's trade logs? Yes, you can. But we're not trying to cater to I got $100, tell me what to buy crew. It's about learning. And actually this apprenticeship, just talking to us, you'll get a bunch of foundation courses. I think this week, we're going to launch the second piece of the apprenticeship. So if you haven't gotten in yet, on delay, because there's another giant group of classes coming immediately. So last I heard, we were pretty much green lighted to release. So that's happening. If you want to do that, that is explore courses, I think, here. And then you just talk to them and then see if it's a fit, right? Because, it's again, if you're just here for a couple bucks, it's not us, right? There's a lot of other groups. I'll send you to a handful of signal groups, but that's not what we are. Anyways, and we have cool merch.
they do have cool merch. That is also very
new cool merch. Where's my sweater? There it is.
I think you're just having
Patience.
bro. I think I'm gonna have to rock it one day. Patience. It's a good one.
All right.
It's a good design.
I like it. It's a money tree, dude.
Jason's Twitter and YouTube putting in the chat. You can get his Discord link on his X if you just go to his link in the bio or papergains.com.
Yeah. And sorry about the NFP thing. I'll talk to the guys. There's indicators, or one indicator that we have released to the public that I'll get up on the website. Not a big deal.
Awesome.
Oh, but I will do a webinar. So follow me on Twitter, turn your notifications on, because we might have one more Tuesday in between. I talk about this NFP thing all the time. I'll do a training for free next month because NFP comes out the first Friday of every month. we kind of been off schedule because the government's been shut down. So I'll do a free webinar explaining the whole thesis and what that's about. And we'll probably give away some free stuff too if you show up. So follow, turn the noties on, and you'll catch it.
All right. I'll be live in a couple hours, folks. Jason, thank you once again. His Twitter right there in the chat. And we will see you guys next Tuesday.
All right. Good luck to everybody. Hope he doesn't blow it.
Bye, everyone.
All right. See you guys.